Just keep a watch on this thing that our recording is on always. I have just started it now and we can get to start. Welcome back everyone. I hope that yesterday's session you must have liked and got some inputs already recorded at your side in your notepads. We will be just quickly doing the recap that what we have covered yesterday. So yesterday we could able to cover why we should be doing the index trading, what you need to, why do you need end-to-end setup to do the index trading, what exactly would be needed to for you to be successful index trader. We briefly talked about scalp, intraday and positional type of trading, futures and options, what you can trade. Then we touched upon trading as a business, required infrastructure to do trading in the right way. Also we spoke about trade management. We went through the tracker which we have to follow every single day for every single trade. We also covered the money management part. Index data analysis is something which we are going to detail out today. Then basics of market structure also covered yesterday, and key decision points. So I'm just quickly going through the slides, just 1 minute, just so that you can recall, because we'll be getting started from here on. And this was the last discussion point yesterday. The key decision points: previous days high and low, previous days close, round numbers like 30,000, 30,500, 31,000. These are the numbers where you will always find pretty high open interest. And these are psychological numbers as well. So if gets broken, you will see a big move, because of course if it is like in the just on the Friday it has happened that multiple key levels have been broken, and um, along with fresh shorts, the earlier long positions gets also squared off, their stop loss gets hits, and because of that you will see sharp movement as and when these round numbers getting broken. Most of the time you will see that market would take a pause and take a reversal on these numbers, but then when it breaks like anything, and you can easily expect 100 points, 200 points move at that point of time. Then current days open and high, these are the two important, and low of course, these are the three important key levels which we always needs to be aware of and mark them. Basically taking a pause for 5-10 seconds. No, not all the three strategies, scalping, intraday, and positional, will be covered today. So don't worry about it. This is what we actually covered up till this slide yesterday. Nothing beyond this. So this is the day 2 content which we are going to cover today. I will start with the remaining part from yesterday, the Bank Nifty data analysis part, a comprehensive data analysis, how you should be on top of your the entire available information and data. We'll be covering that. Then the second aspect, yesterday also someone asked this question, so I'm going to cover it today, how you should be starting your day, and the first trade of the day, how you should be taking that. Most of the days, almost every single day, you will be getting easily a 10 pointer at the beginning of the day, 9:15 between 9:15 to 9:17, when the market gives tremendous liquidity and volatility. At that time we can easily capture a 10 pointer move. How you should be doing that, what needs to be analyzed to do that, we will be covering that part. Then I will go into the scalping setup, intraday setup, positional setup, and putting it all together. Then we'll be sparing some time for questions and answers. So again, expect that we will be at least spending 4.5 hours up till 5 hours today also, covering all these aspects. And please be prepared even if we have to stretch a little bit, because I don't really like breaking the continuation. This is like Bank Nifty training. First time I am doing it for days. Basically earlier it used to be an 8 hours, 7 to 8 hours long session, and I would cover more on the scalping, not the intraday and positional setups, but now it has been included just so that you get benefit of all type of trades which you should be taking if you are focusing only on the Bank Nifty trading. So you are not actually scanning any other stocks, don't even look at anything outside, just either Bank Nifty or Nifty. That's what you should be trading after this training. And of course it's not like that. I'm against trading for other instruments. You can always trade, no problem at all, given the fact that if you have time. But this is very dense and concentrated trading training on in bank nifty trading basically. So, and bank nifty is such a beautiful instrument that it's self sufficient. You need not to look anything beyond that. You can earn truck lot of money only with this one instrument. So better to focus on this, at least since you all have decided that you would like to go for the bank nifty training, then focus on this. Is it like I'm not audible? Okay, Rajesh, maybe just drop off. Just give me 1 second. So this is what I'm going to cover, but recall your learnings and whatever we have covered yesterday, so that you feel that this is a continuation from the yesterday's session. And let's get into the details now. So when it comes to the data analysis part on Bank Nifty, we should be aware of Bank Nifty spot levels, where they are right now, and what are the past historical key levels, supports, resistances. We briefly covered that yesterday. I'm going to build that entire chart setup, which I'm going to use for all three type of trading. So scalping, intraday, and positional. Few things won't change. The basic chart structure and market structure analysis won't change. That will remain same. Also, when we talk about drawing on the chart, so be it supports, resistances, ranges, those will also not change basically. That will remain same. The only thing which we might need to work on is the time. Okay, so for scalping, we will be using 5 minutes and 15 minutes time frame. For intraday, it will be 15 minutes and hourly time frame. And for positional trades, we will be using hourly and daily time frame for same kind of analysis. So spot level is another important one important aspect. Second is futures. How futures is trading right now? Are we in a premium? That means futures price is more than the spot level price, or are we in a discount where the spot level is higher than the futures level, or they are both somewhat at the same point basically. So we'll be doing that. We'll be doing the option chain analysis in detail today, and the finding right strikes to trade. This is already covered yesterday, the right strike part in the tracker, the Excel tracker, which we discussed about. So this guide will help you to trade weekly options. This is again like, don't follow this particular thing for positional trading. For positional trading, we will be working with the monthly strikes. So that I'm going to cover separately. But for intraday and for scalping specifically, this is the table which you should be following each particular day. This is the table which you should be following. Okay, now I am going to share the entire screen. Let me know if you are able to see the NSE India website. So go to live market index, and here you will see the sector Bank Nifty. Now this is the screen or the information which you should be checking pretty much frequently, like every 15-20 minutes, max half an hour. Whenever you are actively trading, you should be looking at these few screens which I am going to cover now. So Nifty Bank is over here. You can see the overall how the Nifty Bank is performing for the day. Very crisp user interface over here, which will tell you the overall trend for the Bank Nifty for today. What is the current price, last traded price, you can see over here. and you can keep on refreshing. Unfortunately, this screen doesn't refresh automatically, so you just need to keep on refreshing every 15 minutes, and you will get a glimpse of what is happening with Bank Nifty right now, what is happening with the rest of the stocks over here, which are participants of the Bank Nifty. Now, another key important aspect, note it down in your notepads. I don't care which stock has the highest gain or highest loss today. So if you see over here, Federal Bank is minus 0.35. There was no gainer on Friday, and then RBL was the biggest loser for the day on Friday. But I don't care about what whether this particular stock is up or down. What I care about is where is the most of the money being put, and that we will get with this particular column called turnover in crores. Even if you are looking at 9:15, 9:20, 10 o'clock, 11 o'clock, every time this particular column will be the most important column for you. If you see, if you click on this, you will get, just double click on this, and you will get this table sorted on this particular column, and then you will get to know that which bank under the Bank Nifty is currently most active. These two banks are most active, and you can even look for some intraday trades for these two banks in within these two banks scripts for that particular day. I don't care about that, what methodology you are using, but these are the two stocks where on Friday these were very hyperactive in terms of trading. A lot of traders were engaged here, and because of that, a lot of money was being traded, a lot of money being got exchanged, and that is why the turnover is huge over here. And with the price movement, if you see over here, both of them were negative, so there was some pretty heavy selling happened for RBL and Yes Bank. Obvious reasons, I'm not going into the reasons as of now, but because we could see this information in front of us at any given point of time, and keep this screen handy. So at any given point of time, just sort it on turnover in crores, and you will know what script is the catalyst for the day, who is driving Nifty. Of course, RBL and Yes Bank have less weightage, so even if big movement happened over here, if rest of the heavyweights like HDFC Bank, ICICI Bank, SBIN and Kotak Bank, these are the most heaviest weighted banks basically. So this guy, keep a key momentum on what is happening with these four scripts. These are the four biggest participants. If you go back to the material and see the table, what is the weightage of individual script in Bank Nifty, you will get to know that HDFC Bank, ICICI, Kotak and SBI are the top four basically there. So these are the uh, if there is a huge momentum happening in these scripts, then you will see that Bank Nifty is also more or less aligned with these scripts. Friday was an exception. We have seen across the board a lot of selling on Friday, and because of which Bank Nifty was also hugely on the downwards trend. In fact, for the entire day, we haven't seen any of the retracement or any possibility of reversal. So that way, it was a straightforward, absolute one-sided negative day on Friday. And because of which, if you see over here, all the participants are actually contributing to that. None of the bank was on positive side. But just always keep note of these four scripts. If they are in going in one direction, they will pull the Bank Nifty in the same direction for sure. Even if the rest of the stocks, there can be a possibility like one of them like PNB is going positive today, but since it has a less weightage, it won't impact the Bank Nifty in a big manner basically. So always sort on the turnover and look for top 3 4 stocks, what is happening with that. A lot of money involved, and all of them are negative, so my bias for the day would be negative at present. After half an hour or 1 hour, it may change depending on how the market is taking the direction. But just by looking at this screen, I could see that what is the trend happening. If you see, RBL is going downwards, Yes Bank is pretty much downwards, SBIN, every single script since morning. And if you see it at 11 a.m., it will be, this particular graph will be from 9:15 to 11. If you see it at 1 p.m., it will be from 9:15 to 1 p.m. So it's a real-time updated graph, and we just need to look what is happening today. If majority of my top constituents, all the stocks which has heavy volumes and heavy turnover today, if all of them are going down, bank nifty will for sure go down. If all of them are going up, bank nifty will for sure go up. At times we might get mixed signals as well. Need not to worry about that. We will look for the other confirmations. As of now, this is screen. How to read it? Is it clear? Just give me a confirmation. Great. So this is going to be a handy screen. Always remember this thing. Now there is a sibling of this screen which is in the live market. Go to live market and pre-open market. Okay. If you go to the pre-open market, this is the information from 9 a.m. to 9:15 a.m. and this screen will be used for the first trade of the day. I am covering both of these screens together because these are pretty much same. This will provide you pretty much same information. So live market pre-open around 9 o'clock and 8 minute every day. So 9:07 it will freeze the data. 9 o'clock 8 minute is the time when you should be refreshing this and select Nifty Bank from here. So if you see right now, this is Friday morning information. See the beauty. How did the pre-open market was on Friday? All of these banks were in green on Friday morning because we are up for a gap up opening. So that happened, and from the day clock hit 9:15, from that point we have seen heavy selling basically. Now on this screen also at 9 o'clock 8 minute, what I'm going to do, I'm still not just looking at who is the biggest gainer and who is the biggest loser or whatever. What I'm going to see is where is the money going actually. So if you see over here, I sorted with the value in lakhs, and Yes Bank was the catalyst. Yes Bank was there for the entire day. We have seen the heavy selling part in Yes Bank. Approximately 1000 CR was the volume which we have seen in terms of money. Right from the pre-open, Yes Bank had heavy selling part basically. Though it was in the green, but if you see over here, 200 lakhs is around 2 crore rupees being traded in the morning itself. And if you see chart, it actually tried to went up and then came down. This is between 9 o'clock to 9 o'clock and 7 minutes. This chart is only of 7 minutes. So if you see that, if you see HDFC Bank also opened at top and then slightly came down. Okay, so this you have to carefully read, top 2-3 stocks only. This will give you a understanding that how the market is supposed to behave at the very beginning. Now there is another level of information which you should be looking at right at 9 o'clock at 10 minutes. If you click on this, you will get to know that how many orders and what price these orders have been put in. So if you see sell quantity and buy quantity is appearing over here. Next level of information you will get into the Zerodha kite. So you just need to open one or two top banks, not many, and see what is happening over here. At 9 o'clock 6 minutes, you will get to see that how many buy order are pending and how many sell order are pending. And Yes Bank had a huge selling order at that Friday morning time. I guess we had some screenshots also captured. I'm not going into that, otherwise it will take a lot of time, but we had some things. Yes Bank had a huge sell order even before the market opened actually. Not certain if Friday morning I sent that screenshot to this group. The point over here is basically you should be aware that highest money is being put on these couple of banks over here, 2-3 banks. If you see this and this, if you combine 3 banks, I think rest all you, if you sum up everything, still it will be less than this money basically. So that is what we have to track every day morning. So first thing, what has happened from 9 to 9:07 with these banks? Step 1. Step 2, how my order book is looking right now when I am opening at 9:15. Same thing you can see at the futures chart also. This will also start showing you futures, bank nifty futures level 2 information. This is level 2 or market depth. So you can see that what is happening with futures also. If you see that both these places, like top couple of banks and bank nifty future has like double the sellers than buyers. That means initial couple of minutes we will see some selling coming in, and we can just jump in and jump out in a PE. So PE will give us 10 points at that time. Choose the strike as per the table which we have given. So first. Second is, if you see that all these couple of banks and bank nifty futures has double the sell buyers than sellers, that means we can expect a push up in the initial few minutes. When this push up happen, we will trade a call. Are you guys getting so far? Just give me a confirmation. Any confusion, just drop a question. I think I'm pretty clear, but if you have any confusion, just drop the question. Now, when I'm going to trade on chart. So that is another important aspect I will be taking care of. How my current chart looks, and basis on that I will decide whether to go for PE or CE at 9:15. So half of the story is done over here, rest half we will be doing with the chart. Okay, this analysis needs to be done anyways if you are willing to trade between 9:15 to 9:30. Initial 15 minutes, if you want to trade, the pre-open market analysis is a mandatory thing. You must do this. Find the catalyst. I don't care if you are not comfortable trading the bank nifty futures or options, that is fine. If you are comfortable trading this catalyst over here, okay, I will just track the Yes Bank. I see that there are 3 times sellers than buyers. Let's short Yes Bank at the opening, either in cash or in futures, I don't care, depending on your risk capital and your risk reward ratios and all those things. So if you are fine, if your capital permits to trade Yes Bank futures 1 lot, 2 lot, do it, because you will find absolutely fine catalyst over here. First or second stock you can always take a position. Just make sure that if you are taking a larger position, then I'll combine this with the chart trading, which we are going to cover in the later section. So this is how I am doing my first trade every single day, and this works wonderfully well. You will get easily 90% accuracy. Maybe if you are trading 10 days, one fine day might be you might be exiting with break even or with some losses, but 9 days you will make money if your analysis is correct over here, if you are doing this much due diligence before punching in your first order. So 2 screens we have covered. One is on the index, which is for the during the day from 9:15 onwards till the end of the market. You can use this screen first, and the second one is for pre-open market. Select a bank nifty from here. If you are interested into stocks, futures stocks trading, you can go for FO stocks also. Same sort of analysis you can do. This I cover in my equity trading also, by the way, training by the way. So if you see over here in the pre-open, 7 crores being traded on SEC in the pre-open. So this is another catalyst for me for the day. I can definitely look for some intraday trading in SEC. Let's look what has happened with SEC. I'm just taking 1 minute over here. I'm not going to spend a lot of time, but look what has happened on SEC. And if you see over here, a huge buying in the initial 5 minutes. Let me just make it a blank chart. Sorry, yeah, that was a Heikin-Ashi chart. That is why. So it is a gap up opening, and then since thereon there was a selling pressure, you could have shorted this at just a second. Could have shorted it at this point. Okay, so wait it actually. No need to. So this has been a low has been made, and then we saw some retracement when this super bull candle, if you see over here, broken below the low, that is for sure that you are going to get at least this much target from here on. This much definitely will be hit during the day, because this will fill this gap. We have sufficient scope of taking profits, and you can keep your stop loss just above this point. A good risk to reward ratio trade. Scanner, you don't need any scanner. There is no rocket science. This is the scanner in front of you. Just scan your scripts on this particular scanner. You will find 2-3 good catalysts every day, and those you can focus on. Yes Bank is appearing over here as well. HDFC Bank is also appearing over here as well. So these are the good catalysts, will give you around 1% either side, or either at the long side or the short side, depending on how the market is moving and how this particular script is moving. Just select these, put on watch list, and then just start tracking. Rest basic knowledge would be like basic, all your trend following indicators, whatever you are following, I don't care. And then do some due diligence and take your trades basically. Pratik, I'll be covering charts, how I'm looking at the charts basically at the pre-market open and all these things basically. Pre-open market will work for all the stocks, don't worry. As I said, if you are interested only in Bank Nifty, select Bank Nifty from here. If you are interested into other stocks, like I want to see Nifty 50 stocks only, go for this. I want to see futures and options stocks only, go for this. And you will find the catalysts over here. Okay, rest you just need not to worry about these. Nifty, futures and options, and Bank Nifty. These three, if you are covering, then it is good enough basically. Then do we need to read charts? Charts we are going to jump in next. Hold on. So this is on the these two screens. The third and most important screen is the option chain analysis part basically. Now this you will not do between 9 to 9:15. There will be nothing available on this particular screen. This will start populating information from 9 o'clock 15 minutes onwards. 9:15 onwards, this will start populating. So this is for our intraday directional analysis, that what pre-market screen analysis which we are going to do. This screen analysis which we are going to do between 9 o'clock to 9:15, will this information, this data will be valid only up till 9:30. After 9:30, since the real market has started with much more higher volumes, you should be looking for the other screen which we have covered already. So if you are at 9:30, if you are trying to analyze something, try to analyze this screen, okay, which is the real equity stock watch screen. Between 9:15 to 9:30, if you are taking trades, you need to analyze the information from the pre-market, because this will give you better idea that how the pre-market was behaving, and accordingly you can take some trades between 9:15 to 9:30. So initial 15 minutes, see, we need some background information, we need some data on which we can make some cautious decisions, right decisions, high probability decisions. Okay, so this index and Bank Nifty, this data will not be good enough to trade on 9 o'clock 20 minutes. We will be having only 5 minutes information at that time on this screen, which may or may not be correct basically. So this data will get rapidly changed in initial 15 minutes. So let's not look into this. Rather, to trade between 9:15 to 9:30, starting 15 minutes when we are going to trade, we will be relying more on the pre-open market information, which is already available even before 9:15. Around 9 o'clock 10 minutes, this information will be available, and this won't change for the rest of the entire day. Basis on this, you derive some conclusions that yes, market looks bullish or market looks bearish. I have already covered that how you should be analyzing that. Look where is the most of the money has been put in. Step 1. Step 2, look how the order flow looks into these stocks. Third, look how the order flow is looking into. Now these two are the different order flows. Okay, this is the pre-market orders. These are already placed and executed. These are already executed. What is supposed to happen after 9:15, when the 9:15 market will open? What is supposed to happen? You will get to know from here. So all the order, retailers order, normal market orders will start accumulating into this information over here. And you can see that, okay, double the sellers than buyers. That means Yes Bank is for sure will see some pressure today, and we can look for a short opportunity over here. Combined couple of 2 or 3 stocks of Bank Nifty, which are the top 3 stocks on this particular screen. Top 3 stocks on this particular screen. On when we sort on the value in lakhs, needs to be looked upon over here also, and you will get to know that, okay, top 3 stocks where the most money has been traded between 9 to 9:10, the pre-open market trading, most money has been traded on all these 3 stocks. And now I can see that all these 3 stocks have much more sellers than buyers. That means these are the catalysts for the day, and these guys will drag the Bank Nifty also downwards, so that I can look for an PE opportunity. I will go for buying a PE. Indira, if you don't have, this is the level to market depth information available on each and every broker. Okay, so no matter which broker you are using, you will get this information across the board. This is mandatory for all trading terminals to show you at least 5 bids and 5 offers, which are top 5 bids and top 5 offers will always be available with the quantity, and the total overall quantity will also be available. So no matter which broker you are using, if you are using Nest Trader, it is fine. Upstocks has it, Kotak has it, and every other broker basically. So need not to worry. I'm just using Zerodha, but I'm not going to teach you anything which is not available across the board. Hardly there will be few 1 or 2 indicators. There may be some possibility that those might not be available on your trading terminal, but rest everything will be available. So this is common across. Now moving into the open interest analysis. So open interest always, and this is the basic, I would say, raw information available. Open interest is available in much more sophisticated manner in other tools also, in graphs, charts, these, that, everything. I don't care. We will be living with this. This is the first hand information available on official NSE India website, always up to date, most right and accurate information. Since because of that, we will be using this screen only. Once you understand the psychology behind this screen and the information, it will be far easier for you to anticipate where the market is supposed to go basically. So I'm going into this live market, option chain, equity derivatives, and by default it will be available as Nifty over here. Total bid quantity is what you need to verify, Ashok. I don't care each bids. Total bid quantity is what you should be looking for in the pre-open. Okay. Now select Bank Nifty. By default, it will be selected with the current week's expiry. Now, if you see over here, 25th of July is the weekly and monthly, both expiries combined basically. So you will by default get it. And if you want to select any other expiry, you can select. So next week, next to next week, and then later on, and then this is the 29th August will be the August weekly monthly expiry. So as of now, default current week's expiry is what we have to select. Most of you might be familiar with this screen and some might not be, but just to make sure that you understand this section very carefully, and if there are any doubts, you can ask queries to me. So this is a this table has a ladder which talks about the strike price. Okay, and any strike will have 2 type of options. One is the call. This is the call side, which is the left hand side, and this is the put side, which is the right hand side. Any strike, if you see any row, each strike has a call option and a put option. Step 1. Step 2, for each strike you can either buy the call or sell the call. If you are bullish, you will buy a call. Okay, so there are 2 options in this half section. This half section of the table will give you 2 different options to trade. All these are calls. Either you can be a buyer for the call or you can be a seller for the call. When you are bullish in the market, you will go and you will buy a call. So let's take a very simple example. Currently bank nifty is at 29,800 approximately. This is the nearest. If you see current price 29,770 is the current price. So nearest strike to this price is 29,800. Whatever is the nearest strike, we will call it at the money strike. Okay, whatever is the nearest strike of the current market price, and this is a spot price, this is not futures. Okay, so whatever is the nearest to the spot will be considered as the at the money option. So this is at the money call option and this is at the money put option, 29,800. Now we are at 29,770 right now, and let's assume that Mr. X think that before 25th of July, before next Thursday, 25th of July, Bank Nifty will for sure go 30,100. 400 points move from this current level approximately. Rather 300. 800 is nearest strike. So 300 points approximately. So I'm betting that at least 10% upside momentum will happen by 25th of July. So market will give me this option to purchase 30,100 call option with this price. 95 rupees I can pay, then 20 is the lot size. So 95 multiplied by 20, I will pay and I will buy one lot of 30,100 strike call option. Okay. And if my analysis proves right, this 95 and the market hits this particular level on 25th, this particular premium will remain, will go up till maybe 150 rupees and I will book my profits. Fairly simple logic. I was bullish. I bought a call option anticipating that the premium will increase because the market will go up, and I bought at 95 rupees. I sold at 150 rupees, approximately 55 rupees is my profit. So far clear? Just give me a thumbs up. Good. So a straightforward mechanism. Step 2, when you decided to buy this, and this is a derivative instrument, so whenever you are a buyer, there must be someone selling it. Then and then only a contract will be prepared. So let's say Mr. Y is bearish on the market and he is betting that no matter what, no matter whatever happens, 25th July, before that, Bank Nifty will not hit 30,100 for sure. It can go 29,800, 900, even 30,000. It can go up till 29,500 downwards. But for sure, it will not hit 30,100. That's my reading. That's my technical analysis. So Mr. Y will sell this contract. He will sell that, okay, he will tell that, okay, fine, you are buying. I'm going to sell it. I will collect this premium of 95 rupees and wait till 25th. By 25th, if market doesn't reach on this level, the premium will automatically shrink, decay, and this will become eventually zero, and I will receive this. So I will gain 95 points or 95 rupees and you lose it. So market goes beyond 30,100, buyer will be winner. Market remains anywhere below this level, the seller will be the winner basically. So one guy bought this call option, the other guy sold this call option, and one new contract has been created. So let's say today 21st, I bought, you sold, and one contract created over here. Now one contract created, that means it will increase the open interest by 1. So this will become 2,95,301. Sorry, something bad happened. Oops, I closed that entire screen. Just give me 1 second. Okay, so we were at 30,100, which is at 95 rupees right now, and one guy bought it, other guy sold it, and this will become 301 over here. So when a buyer and a seller enters in the trade and create a fresh contract, the open interest goes up by 1. Say tomorrow I feel that I made a mistake and probably market may not go on to this level, so and this price will become 90. I want to book my loss, so I will square off my position. I become a seller, and then there will be a buyer who is still anticipating that this will go to this level. So there is a third person came in, a buyer, and he bought from me at the price of 90 rupees. I squared off, and someone else will also square off the position accordingly. And so let's take an example that the seller who sold at 95 is now ready to buy at 90 rupees with 5 rupees profit. So both of us will square off our positions, and this will again become 300 back to 300 again, reduction in open interest by 1. So when we see about talk about the change in open interest, if you see over here 295 300 is the increment on Friday in open interest at 30,100. So this is not contracts, basically this is the quantity, by the way. Okay, so this much quantity has been increased in open interest, so fresh positions are added both from buy and sell side, and that resulted into overall open interest of call as 3,01,700 at 30,100 strike. Logic is clear so far? How does it works? If you have seen that 15 minutes video on open interest analysis, this concept should be very clear to all of you. Good. So I'm proceeding further. Exact mirror image of this will happen on the put side. So let's take an example that I am bullish still, and I feel that 30,100 is the price market will go up to. But I really don't want to buy this call. I want to have a flexibility of booking my position with somewhat profits in between, even if this price doesn't come. So let's take an example that market will go up till 30,000, but don't hit 30,100. Then what? My next option is to sell a put. I will sell this put because the moment market will hit 30,100 and go anywhere beyond this 278 rupees will reduce, and exact same mirror opposite of this, there will be a buyer who will buy anticipating that market is going to go further down. So if market is going to go down, my option is to buy a put if I am a buyer, and if I am a bullish person, I can sell the same PE. Okay, so and then that will accumulate in the open interest over here, and that basically turns out to be the total overall open interest. Now this this particular table needs to be read relatively every 15 minutes, and you need to check couple of points which are very very important as an input for all of you. First is what is happening with the at the money, what is happening with the at the money strike, a strike below this, a strike above this. These are the three strikes you should be prominently looking for. Since morning, what has changed? So if you see since morning on Friday, this strike had 1,19,000 quantity added, whereas if you see the put had only 11,000 quantity added. So lot of put side action is not happening. Not many people are writing puts basically, and not many people are bullish on the market, whereas all these additions indicates that always see this ladder from the view of a seller. Okay, fresh positions are added, that doesn't mean that people are bullish and people are only willing to let the market go up. Buyers are there, but then since these increments have happened in the open interest, all these increments have happened because there are sellers, equal amount of sellers than buyers basically. That is where the contract has been made, and that is why it is increasing basically. So always see that this ladder from the view of a seller. And who is the seller? We all know that buying doesn't need additional margins, but selling needs a lot of additional margins. To sell one lot of bank nifty, you would need anywhere between, depending on your broker, anywhere between 50,000 to 80,000 in the margins. So all these sellers are big shots, and contracts are added and open interest is increased because sellers are selling over here. All these sellers are selling over here, and who is buying? People like us, people like retailers who are buying basically anticipating that market will take a reversal and now it should go up. So with this thick selling on all these levels during the day, we knew that bank nifty will not reverse. It is unlikely that bank nifty will have any reversals today. This has been mentioned in the student group also. Let me just find that place. I did mention, I recall that market is unlikely to reverse today. Oh, we are not on Friday, I guess. Somewhere I did mention, but then it's okay. I'm not able to find it right now. Too much of chat happens basically. But anyway, so with this information, we can very clearly say that a lot of as per the OI, let me just take up the questions. It looks the next expiry will be around 30,500. Is it correct? I am not sure from where you are anticipating this 30,500 next expiry. Are you looking at this row? No, the current information says that the first hurdle we have, a big one, is at 30,000 itself. Forget about 30,500. Okay, so in very very simple terms, higher the open interest over here, this is the thick resistance. This is the thick resistance. The call side open interest in the OTM, these are all OTM. Okay, so if you see over here, highlighted options are in the money and rest are out of the money basically. So these are in the money call options, these are out of the money call options. So when you are looking at the OTM call options, listen this very carefully. When you are looking at the OTM call options, higher the open interest is basically stronger is the resistance at this level. So right now, even to break 30,000 looks difficult for market before next Thursday. Higher the open interest over here and higher the change, that means it is going to be a much stronger resistance on this level. Vis-a-vis, we also need to see what has happened on the put side. So if you see 30,000 strike, lot of reduction has been happened over here in the open interest. It is negative change. That means people have exited from their put option positions. Who exited? Put writers exited. They are no longer confident that they will be able to pull the market up again. Put writers are bulls, call writers are bears. Okay, don't get confused yourself. Put writers, people who are writing these puts, people who are writing all these puts are the bulls. They want market to go up. People who are writing calls over here, sellers of the calls, these guys are all bears. They want market to go down. So if you see over here, who exited from their positions on Friday? All the bulls exited from their positions. All these in the money options, in the money put options have seen negative growth or reduction in open interest. That means they are losing the confidence of keeping the market on the higher side. So we are in a confirm bullish trend as of now. Where can be the support next? Next support we can expect before Thursday. If you see 29,500 on Friday, it has seen a good healthy increment in the open interest. So put writers are writing at this level right now. So next is what? 29,500 is the level they would definitely like to protect and save it. So decently healthy writing has happened on this level on Friday. At the same time, if you see the confidence of bears, the call writers, not a big amount over here, not a big amount over here, not a big amount over here as well. So call writers are also not very confident to push the market downwards up till these levels. There is a reason for that. This reason we have actually covered in the yesterday's chart. I will be revisiting that. So even the bears who are writing the calls are not very confident. If you see, this is a smaller amount over here. Overall open interest is pretty small. So we are at the very equilibrium right now in terms of uh, how the market is going to behave. So vis-a-vis, if you compare this with this, you will derive that the lot of additional or heavy put writing has happened over here. So this is a good support. When we were talking about the resistances, we were talking about this column. These are all resistances, these are all supports. Okay, out of the money puts are supports, out of the money calls are resistances. So if you see over here, this is going to be a good support. This is also looks a healthy support compared to the open interest at this side, and this also looks to be a good support zone, because at the 29,700 strike we have seen that a very less increment of open interest from the call writers, whereas put writers are writing at pretty good speed or pretty good volume over here. So what we should be deriving for Monday? First thing first, my spot is at 29,720. I will look for this key level. This is the next support level for me. Okay, this should be treated as a support level, healthy open interest over here. And this is the strongest support underneath available, where we have a good 4,27,000 open interest. We also need to check this change in the open interest. So if you see, Monday morning market is stabilizing, even if not going upwards. If it is stabilizing for an initial 15-20 minutes, 30 minutes, you will see a pretty decent increment into these numbers over here. Reason being, we will be in a consolidation zone, and there is a good probability that market might reverse from here. To what extent the market will reverse and go up? First thing, we have to check the immediate next strike. So we have seen that, we could see that 29,800 has much better open interest on the put side than the call side. Put side is 141 and call side is 119. That means 29,800 is what I would look for first. So if it breaks above 29,800 and stay there, these guys will get a lot of additional confidence who are actually writing puts over here, and they will add much more positions. And these guys who has actually shorted calls will start losing their confidence. They will square off their positions. So this will be a long unwinding over here, and this will be a fresh short build-up that will push the market towards upside. This will push the market towards upside. So 29,800 is the key level I would look for. If it market goes above this, Bank Nifty goes above this, this is 30 points away from the spot, by the way. So market goes 30 points up and stay there for a good 15-20 minutes time, then we can see a reversal on Monday. If it doesn't, and if we see further fresh selling added over here, so this become 2 lakh, this become 2 lakh, and fresh further selling happens even in these areas also, that means we will continue the bearish momentum for sure, and market might see another 100-150 points downwards momentum. Yes, Satyam, it may be possible that I have told on Thursday that market is unlikely to reverse from here. Yes, Rajesh, I would ideally prefer that you should be looking at this screen every 15 minutes. If not, then half an hour is a good time. You should at least be looking at every half an hour how the open interest is getting changed. Okay. Um, yeah, short build up for bulls is maybe some little bit confusing over there. So don't worry about that. I was saying that shorting of put options over here. Okay. Lot of shorting of puts, if that happens, shorting of put happens, that will increase the open interest, and that means the market is going to be going upwards. Basically it will go upside towards these strikes. I hope I'm clear. OI decreases for both calls and puts at 300-400 points away from current strike. What does it mean? It won't decrease usually. It will always increase towards the expiry. Reason being, deep out of the money calls gets shorted pretty heavily by all the call writers and put writers. So deep out of the money options will be always going to be increasing in terms of open interest. These are the deep out of the money. Okay. But if you see over here, this decrement, it is like approximately 1,000 points away. This decrement is happening because the writers are booking their profits. So these strikes, the premiums have already eroded a lot. It has decreased a lot. Now these call writers are actually winding up their positions. They are actually booking the profits, and because of which this negative is happening over here. Same will happen on the put side also by the time we will reach towards the expiry. Next is basically, once you do this due diligence and analysis, along with this you should be also looking the chart. So as I said that 29,700 and below this, the call writers do not show a lot of confidence as of now to push the market further down, and there is a reason for that, which you will find in the chart. So I'm going to open the Bank Nifty chart right now, the spot. Okay, and let me open it in the full screen mode. Yesterday we used 15 minutes, so I'm gonna use 15 minutes again. And if you see over here, what all these call writers are trying to do is basically they are trying to capture this particular thing, the gap which Bank Nifty created. Okay, and if you see over here, the spot over here is 29,553, approximately 29,600 is what I would count as an spot level. So we are already in a zone which is basically gap filling zone, and there is a defined support over here below that. Okay, so that is why after coming to these levels, you will see that lot of call writers don't have uh, confidence, or they are not aggressive enough to further write the calls which are in the money. So out of the money calls have seen very thick writing over here. That means these guys will not let the market go up further, but we might see some consolidation between these four strikes now. Basically, at least for Monday, this is what going to happen. If we see very aggressive writing happening on call side over here also, that means we are going to go for sure over here, and even further down also that can be a possibility. So if you see 29,700, 600, 500 even is going to increase a lot of call writing over here, that means we are going to go further down, and we might break this support level also. Quite a possible scenario if that happens, but that is not happening right now. 29,500 put over here has seen very decent increment in the put writing. That means 29,500 spot is what all the bulls now are counting on, that this is rock solid support. This is not going to get broken, and we will see some reversal from this particular range. This is the gap range. We will see some reversals from here in coming days, and that is what injecting confidence in these guys. And that is why even on Friday, even in this bloodbath market, these guys increased their positions over here on 29,500 strike. Am I making sense right now? Just give me a confirmation. This you have to keep on watching, keep on reading, share your interpretation into the student group also. It will take few weeks time to get hold of this information, but then you can derive a lot of good logical conclusions and high probability trade ideas out of it. Especially people who are looking for positional trades must always look for the open interest change and how it is happening. Looking at the current information, I am not confident to go long in Bank Nifty. I'm not confident to go long in Bank Nifty. If you tell me just flat, how would you interpret this information right now for futures? Let's not go into the options. Let's derive that for futures. Either I want to buy futures or sell futures. How would I derive this information? So my conclusion would be looking at this data, especially this one. I am not very confident to go long positionally on Bank Nifty as well. So shall I go short? I would not as of now. I would rather prefer to wait. And if these bulls are able to push Bank Nifty somewhere around this level, 29,550, 29,560 is the level which I could see that yes, this is the level which is a strong support on the chart, and which is a strong support looking at the open interest information. I would be a bull at between 29,500 to 29,600 range, from where I would see a reversal. Basically, I would look for a reversal. The moment I get a confirmation of reversal, I will be a bull, and I would like to buy at that level. So right now, no selling, no buying. Like right now, as a positional trader, intraday we will be doing, scalping we will be doing for sure. As a positional trader, right now I would prefer to keep quiet. Looking at this information, I don't really want to go long, especially for this expiry. I would prefer let the Bank Nifty come up to between 29,600 to 29,500. Let it show the consolidation. Let it show the reversal sign, and then I will go for long, mostly for the August contract if I at all trade the future. So far so good. I hope that this open interest information is understood well, and you are going to derive conclusions basis on this. I would like to get inputs from all of you in the student group about your interpretation and reading in the live market, basically about this information. I'm going back to the presentation right now. So spot futures we have discussed, option chain we have discussed, the strike price, what strike price to trade we have discussed about this yesterday also. Just keep it as a handy guide. We are not really, I mean, not necessarily you should be always sticking to this, but this more clarity you will get when we are going to have this ongoing discussion into our students group, where you will find me trading on a fine day even with a strike which has a premium of 400 rupees, and even on the expiry day I would be trading 120, 130, 140 premium strikes. So that is basically live market analysis, volatility, and our aim in terms of how long I'm going to stay in the trade. I'll be absolutely fine to trade a 200 rupees strike, a premium of 200 rupees for 10 points on the day of expiry as well. Whereas I'm advocating that you should be looking for 50 to 100 rupees strike. This is because when I am trading, I know what I'm putting on the stack. At times, I will trade with 20 points stop loss also. So that if that analysis is there in the background, then you can go for strikes which has higher premiums. Otherwise, to protect yourself with 10 points stop loss, you should be looking for these ranges and trade on these range strikes which has these range of premiums basically. Okay, good question. That if spot is greater than futures or futures is greater than spot, you will always find there is some difference between spot price and future price. If you see currently also, spot is 770 and futures is 934. So we could see 834. So we could see around 64 points premium is there on the futures right now. Two things will derive this premium, either premium or discount. So one is basically how long we have before the duration we have before the next expiry. So between current date and the next expiry, if we have significant duration available, if we have many days available, all these futures traders would be giving some premium basically. So that is one reason for premium. This, by the time we will go towards the expiry, the spot and futures will remain on the same, more or less on the same price basically. So this will reduce, the premium will reduce towards the expiry. The moment we will go towards the expiry, it will keep on reducing. So that is one. The second is uh, more the premium on bank nifty, especially during a day. If you see the premium is increasing on futures, if during the day, say morning, this is 64 points, at 10 o'clock this becomes 80 points, this is a sign of a bullishness basically. People who are buying futures are more bullish towards the market and they are ready to give higher prices even if the spot is not moving that much. So relatively, futures traders are much more bullish than the stocks underneath, because this information is coming, this is being calculated basis on how these 12 stocks are performing, which forms the bank nifty. So despite that stock themselves are not performing that great, futures traders are bullish and they are ready to pay higher prices to purchase futures lots, and because of that the premium is getting increased. So one interpretation of when the premium during two point of time, like from morning 9:15 till 10 o'clock, premium increased by 20 points. That means we are looking for a bullish move even in the spot in coming time. First, the second thing is, if the premium is shrinking, premium is reducing, that is a sign of bearishness, that futures traders are not ready to pay higher premiums on spot. Reason being, they anticipate that market will go further down. So if we see the bank nifty spot, just give me 1 second. So if we see bank nifty spot on Friday morning was at 30,500. Okay, this level 30,500 approximately. And if we see the futures, just give me 1 second, let me just clear out everything. So 30,513 was the futures price, and spot was 30,513, approximately same level. So spot and futures both were trading at the same level. There was no premium on the futures when we started the Friday. Okay, eventually market dropped for approximately 700 points, and now we see that there is a premium of 65 rupees. How do you interpret it? Is it like the bear move has been already over and now we should be looking for a bullish sign? Because the buyers over here, are ready to give more premium, because the spot has already reached at 825, and the future is still trading at 834. Something is wrong, man. How come it is showing the same price over here and over here also? I'm looking at the correct data. It's showing, it is showing a good difference over here, 29,770, and this is 29,832. So something is wrong with the chart in Zerodha basically, because it's not showing the information right for the spot prices. This is Bank Nifty spot, should be 29,770. Rather, it's still showing the futures price over here. Let me just see what is the spot. Even the spot is showing over here 29,835. Then why the futures price is different? Trading view won't show wrong information. Let me just see. 770 is what even the NSE India website is showing. Yeah, spot is 770, but why the chart is showing 935, 835? This is the spot price, 835, 36 is what it is showing on the, and even on over here the price is something different, chart is showing something different. No, maybe not today, but tomorrow might have been something wrong with this, because it went under maintenance basically. Okay, trading view, how to see these candlestick patterns? I have showed it yesterday. Just go to the indicators, select the public library, scroll it down, and see this candlestick patterns identified. This is the indicator you need to apply, and once you apply this indicator, you will get the candlestick patterns being identified over here. This I have covered yesterday, so you just go through the recording. It was covered in little more detail. So something is wrong, but then we have to basically look for the difference, gradual difference between the spot and the futures price. If the difference is increasing, that means premium is increasing, and we can go for an, we can interpret it as a bullish sign. If the premium is decreasing, we can interpret it as a bearish sign. As simple as that. Okay. Now I'm moving on to the next part. chart setups basically. So we will go into the charts now. The key bread and butter for us, because we'll be acting on charts finally after all this due diligence and data analysis, this is needed to have a very cautious decision and create our bias towards the market. What should I expect from the market? Okay, so don't just blindly decide that today I feel the market will go up and I will be a bull, or I feel the market will go down and I'll be a bear. Same data analysis of pre-open scanner, the index part over here, the index part over here, and the option chain analysis can be done on Nifty also to derive your own interpretation. So all these things can be done on Bank Nifty and Nifty both. If you want to see where the broad market is supposed to go, where the Nifty is supposed to go, do this analysis on the Nifty. If you are focused on Bank Nifty, do this analysis only on Bank Nifty. But what I want each single day, your bias or your mandate towards the market, whether you are going to be a bull or you are going to be a bear, needs to be derived on basis of the analysis which you are doing. Okay, don't just anticipate. Do not follow any news. Do not follow any analyst, including me. So if I am saying that market's supposed to be going to go up today, don't just blindly follow and go for a call. Look why it has been told, why it has been said. If I'm saying the market is going to be bearish today, look why it has been said like this. There must be some reason behind that. Analyze that reason, and the reason will come from these things which I have covered right now. Okay, next is chart setup. So this is basically a larger time frame chart for intraday and for scalping. Now this is going to be applicable for scalping and intraday both. And the first chart will be a 30-minute range bar chart. So I'm going to build it now basically on Zerodha in front of you so that all of you can follow it. Okay, let me close this thing. And now I'm going to use futures chart to build all my charts. Reading and everything will be on the futures chart. We are not going to use the spot chart because the spot will not have the volume. Spot is not being really traded. That's just a combination of 12 scripts which are underneath that. So to make sure that all my charts have indicators related to volume are working fine, like volume weighted the VWAP we are going to use. So volume weighted average price is we are going to use. If I use it on the spot, it won't populate anything because there is no volume associated. So I need to have combined analysis on candlesticks and volume both, and some of the indicators which are dependent on volume. That is why I need to use futures chart always. So first of all, we will be changing the chart type from candlestick to range bars. Okay, go to range bars, and some of the trading platforms will not allow you to use range bar, which is fine. You can either replace range bar with the normal candlestick or Heikin-Ashi candlesticks, or even this item, Ranko. Okay, these are all different. I prefer range bars. If your trading platform doesn't allow range bar, please go and open an account with Zerodha or any other broker who provides range bar charts. Kotak also has range bar, so you can use Kotak also. I am using Kotak for, but for this longer term, like 30 minutes time frame would be 30 minutes over here. For 30 minutes chart analysis, I am using Zerodha only for this type of chart. So chart type 1 is the range bar chart on 30 minute, and we need to change the setting of range as well. So by default, it will select some points over here. So if you see 151 is the, each bar represents 151 points of Bank Nifty futures. I need to make it to 10 points and hit enter. Now the chart looks completely different. Each 10 points move on Bank Nifty will plot a range over here, a range bar over here. irrespective of time. So the moment I selected it as a range bar, it actually changed the settings. So volume has gone away and each bar represents 10 points move. If market moves 10 points down, it will be a negative bar. If market moves 10 points up, it will be a positive bar. 30-minute time frame, range bar with 10 points as each range. Each bar represents 10 points basically. Okay. Now this chart is clutter free chart. It is pure play price action. Nothing else is here. Okay. It's pure price action. This will give you a medium term trend for the market. Renko is not same as range bar. Some of the students are using Renko. You can discuss that into the students group, how they are using it. Shankar, this is for scalping and intraday both. Okay, so for specific intraday pinpointed entries, I will be talking the second chart. There is a chart going to be there. This chart will give this chart. What are the interpretation out of this chart? The interpretation one is that I need to analyze the broad medium term trend of the market. So when you see this chart, it will be just a cakewalk for you to interpret where the market is going right now. When we see on the candlesticks, we need to make higher highs, higher lows and all those things. This chart will give you that by default. Okay, just by looking at this chart right now, I can see that it has made a lower low, lower high, 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 lower low, again a lower high, again a lower low, a lower high, again a lower low, a lower high. What does this pattern tells me? Very clearly, without putting even a single indicator, without creating any drawing, I can see the market is in downtrend right now. Still, we haven't made a higher high. So if I make a high above this, then I can tell that, okay, we might have a reversal. Any close of on higher than this one will be a confirmation of reversal. And we may see a something like this. This is a right now maybe a formation of inverted head and shoulder. So when I break above this level, I'll be for sure counting for a reversal, because inverted hammer would inverted head and shoulder would be a reversal. Its head and shoulder is a reversal pattern basically. So you might see a reversal from here on. But that is just a anticipation right now. Let it plot, let it happen, and then we will derive our conclusion on the basis of that. So far so good. Right now we are actually making lower highs and lower lows till now. So this is a downtrend market. Trend is something which you can very clearly identify on this chart number 1. So range bar chart, 30-minute with 10 points to analyze where the broad trend is right now. But I will not only look only the bars, I will also plot some indicators on this. So MACD will be there, RSI will be there, pivot points will be there, super trend and stochastics MTM. These are the indicators I would like to put on this chart. Okay, so total 5 indicators. Let's put them. MACD with default settings. Nothing needs to be changed over here. RSI. Again with the default settings. Pivots. Now this will be Fibonacci. Always Fibonacci pivots. Super trend and stochastic. 2 more. Let me see. Super trend has a different setting. 7-2 for faster signals. Done. And stochastic MTM. and this is 10 3 3 10, 10 3 3 10, exponential moving average always. Done. Okay, so this is how your chart will look like. Now each time you will get a much clearer picture. Now whenever you see at least 3 of your 5 indicators are aligning, so if you see over here the cross has happened on MACD, RSI is going upwards, stochastic MTM has a crossover, super trend has a crossover, we can anticipate that we will be having a upside move. So we are in a downtrend market right now, but still this is a good upside move, approximately 70 points upside given. Same, but I'm not going to trade this more or less because I know that overall broader term trend is on the downside. If you see over here, broader term trend is downside. So what I'm gonna look over here is any of the shorting opportunities basically. Where can I short? I can short over here. This is one point where I can short. This is another one where I can short. But MACD is not aligned right now, so I may not be very confident about this. This is where I am getting a perfect setup. Super trend, MACD is also, RSI is going downwards. This one is also going downwards. So this could be a good point to short over here. All the indicators are in place and we can go for a short opportunity and see how beautifully market has fallen from there. Over here as well. Over here also it has given a decent move. All these moves are, if you see 5 bars over here, all these moves are around 50 points. When this happens and if you are taking a trade on puts, because we are actually in a downtrend right now, so we will be taking puts over here. Whenever the signal is coming, we will take a put, and that put will give you easy 10 points basically. Again, I'm not doing the pinpointed entries on basis of this chart right now. Stochastic default settings right now on this chart, we are going to change it on to 60-60 in the 1 minute chart, which is going to be there right now. Over here, use the defaults. This is a longer term chart for us, actually 30-minute chart. So this is to give us market direction, and whenever you see at least 3 indicators are aligned, you can interpret that yes, market is going to go down or up depending on what the signal you are getting. So signals are pretty clear over here if you see, because we don't have any clutter, we don't have any noise in these charts basically. The only thing which you additionally need to take care of is that, like if you see something like this, there is a pivot just below the trigger, don't go short, avoid this. If you see over here, the next one you can take up, 10 pointers will be easily available, 50 point drop. Next you can also take up, because this is market has moved up. We know that the longer term trend is downwards, so I should be looking for a shorting opportunity. I should be looking for a put entry over here. See, the retracement has happened. Negative candle, there is a trigger over here, and MTM is also aligned. We know that there is a resistance also above, approximately 30 points above we have a resistance, so you can go for a shorting opportunity over here. People who are doing the intraday trades, people who are going to do intraday trades need to be very focused on this chart. Okay, for scalping this will give you just the direction. For intraday this can give you entries as well. Real pinpointed entries can also be given, taken on the basis of this chart if you are going to do intraday trades, because you need to hold back your position for anywhere between 5 minutes to up till couple of hours. So you can do that, and this chart can be used to identify entry and exit triggers basically. Is this chart clear? Do not go for a long entry if you see there is a pivot just above your price, and do not go for a short entry. So do not go for a long entry over here, though the signal has been given already quite a lot long back. Let me just find a better opportunity. See over here, So though we are in a downtrend, this is a perfect signal. This is a perfect signal which you can act on. We have a support over here. We got the MACD crossover. We got RSI going upwards. We got the crossover on stochastic MTM as well. A perfect bull side signal actually. So let me just see what has happened in the candlestick chart on this particular time. So let's see. This is 2 o'clock 15 minutes on Friday 19. So let me just open the futures chart. 2 o'clock 15-minute candle. Let's just see. This is a 2 o'clock 15-minute candle. This is 2 o'clock 15 minutes. See how beautifully market has spiked up from here. This is a wick. You can take a long entry over here. 799 up till it went to 830. Approximately 40-50 points move has been given. A 40 points move, which is good enough basically for a 10-pointer scalp or positional trade or intraday trade, sorry, on options basically. And this is I'm taking this example just for the sake of example. I am not going to trade this because we know the overall market is in the bleeding stage right now, so we would always look for shorting opportunities. Let's look for a better shorting opportunity somewhere. So it is already too late to go for a shorting opportunity during the day. This one is a near perfect example of shorting opportunity at 11:45. Let's see what has happened on 11:45 candle. This is 11:45:46. Am I looking at the right place in the chart? 11:45. After this, we have seen. No, this is 11:45, 11:45, 11:45. Not a right. 11:15, and this is okay, between 11:15 and 11:45. Between 11:15 from here till 11:45 till here. This is showing a shorting opportunity over here, but the real price, not for a scalping setup for sure, but for intraday one could have decided over here basically. But afterwards you see that how the market has reacted. Maybe it should be on the 5-minute chart rather than 1 minute, because if we are looking for intraday, it should always be a 5-minute chart. Now it is looking much better picture basically. If you see over here, a shorting signal has been given. I might wait and short on this particular candle, though I know that here it is giving a signal on the other chart, but we should be waiting for this particular area 30,130. If it breaks below this, I would go short. So 30,130 is over here. This candle has broke below, so around 12 o'clock is a good shorting opportunity. Worry free short. You can put a stop loss just above this, and look how beautiful it has gone down. So one interpretation from this chart is that overall broader market where it is going, just shrink it a little bit, so you will get to know what is the overall broad market trend identification, key levels from where you should be looking trade in the direction of trend. Okay, so those key levels would be always the Fibonacci pivot points. Yes, Pratik, MTM we have changed the setup, so I'll be fixing that in the 1-minute chart. Nagendra, if you are going for an scalp trade, 10 points is where you should be at least de-risking the trade. Okay, if you are gaining 10 points, you should de-risk. De-risking I have covered yesterday. Either you book 50% of your position and keep remaining 50% with trailing stop loss, or you book 80% and remaining 20% you can keep trailing stop loss, or else third option is to exit full in case of scalping. When it is an intraday trade, we will be taking it with 20 points stop loss, and you should be aiming for at least 20 points target. So note down some of the rules on this chart before I proceed further. First, the chart number 1 is used for trend analysis. I will not pinpoint my entries basis on this chart, just the trend analysis. Second, on the key support levels, if this chart reverse, then I will take it as a reversal. As long as higher highs and higher lows are being made, we are in a bull trend on this chart. As long as lower highs and lower lows are being made, we are in a bearish trend on this particular chart. If I get 3 or more indicators aligned at the same time towards one certain direction, I would look for an opportunity in that direction. But if the broader term market is downwards, I will look always a downwards entry. If it is on the uptrend, I will look for an upwards entry. These are the rules for this particular chart. Give me a thumbs up if it is clear so far. Then we will move into the next one. Good. Approximately 30 points movement in futures will fetch you 10 points in option if your strike price is correct. Okay, so on Friday, if you are trading with a strike price of 150 rupees approximately, where the premium is 150 rupees, if Bank Nifty moves 30 points, you will get 10 points profit on your option. No, there is no entry and there is no exit on this chart. Trailing of your position will be done on the other charts, basically, which are the pinpointed entry and exit charts. So this is not entry exit chart. This is to interpret where I am heading towards in terms of market momentum. Then I will be talking about exact entry and exit charts now. But if at all you are referring this chart and if you see a reversal happening, let's say I have bought a put over here or on over here, considering that yes, this is aligned with the setup. Overall market is going down, a retracement has happened. Now the market is again going towards downwards. 30,130 is my entry for the put. I have bought a put and I am just keep on trailing over here. Now if you see, the journey has started from this pivot point. This might end up on this pivot point. So this is a very logically good place where you can book your position. I have saw a support has been taken on the pivot, a reversal is indicated, super trend, MACD, RSI and MTM, everything is aligned over here. Let's book our position and exit from here. Eventually the market has broken this as well. Now again came up to this pivot point, but still a very logical place to derive a conclusion that yes, my trailing should stop here and I should book my full profits. Same goes over here also. So this is a place where if you have already shorted on the top, this is a place where you should be looking at least partial booking, if not full, or else you can book full position also. Then don't regret ever if you have booked early. Okay, a profit is a profit. Look for a better opportunity next time. Don't be desperate. At times market will give wild swings beyond your imagination, and then you might realize that, oh, something which I have booked 10,000 rupees profit or 5,000 rupees could have been a 50,000 rupees profit. Don't care about that. The opportunity is gone. We are fine with 5,000, 10,000, whatever we could able to capture. Look for a better opportunity next time. So logically, whenever we are reaching on a good place, which is logically can be plotted as an good entry or exit areas or support or resistances, then you should be looking for an exit. This chart will get further enhanced once we will draw our drawing on the trigger point chart, basically. So beautiful aspect of Zerodha, if I am opening another chart of Bank Nifty futures and if I am drawing something there, that will start reflecting on this chart also. So we'll go into that when we are going to cover the third chart. Prashant, I think you have missed in between. This is a range bar. This is a range bar chart. Okay, so if you miss any part in between of the training, just go back and look into the videos and recordings. I'm moving on to the second chart now. Okay, I have put in some things over here. The broad market trend is your guide, mentor, and ultimate navigator. Never confront with it. Your bias, your mindset, your opinion doesn't matter in the market. You have to read the market, what the market is doing right now, and take decision depending on that. So contra trading is another important problem, or I would say characteristic of people who are not able to make consistent money, is that they think this move has over now and market for sure will reverse. And Friday was such one such market that the contra traders must have got killed, because at any point of time, if you are on the buyer's side, you would hit your stop losses eventually, because the market has fallen 700 points. Bank Nifty has fallen 700 points in a single trading session. Just imagine how many bulls got killed in between, basically, because people might have thought that okay, this move is over now, it will be a reversal. I have seen some of the guys giving call and tips to buy futures or to go for calls C's, basically, and they gave calls at 9:30, 11, 12 o'clock, and so on and so forth. Never reached in the green zone for the entire day, basically. So just the the logic behind this argument is that, or the point I wanted to convey is that, read the market and act on that. Do not assume, do not hope, do not think that this is the point where it will be reversing. Look at this chart and you will see that how many false places bulls might have got captured. 1, 2, 3, 4, 5, 6, 7. All these are the sign of reversals. 8, and still the ninth one is going on right now. We don't know how it is going to turn out, but 9 times market gives such a movement where the bulls might have started with this hope that now this will reverse for sure. Enough damage has been done, enough bloodbath has been done. Now it will reverse for sure. Let me go with a buying of futures, or let me go with a call option buying. None of these worked. So understand what market is doing, and once you read the data properly, once you read the chart properly, you will be able to make conclusions which are more or less 70-80% accurate. And that is what we have to do, basically. If you are hitting 80% time, you are reading the market right, and you are hitting the accuracy, your interpretation is getting correct, you will be for sure a profitable trader. So no haphazard trading, no opinion based trading, no trading by following others. You will do your own detailed analysis and make the decision on top of that. No, this is not a static chart. This is in the live market. This will be moving. Okay. In the live market, this will start plotting new bars as and when the price moves. And we will not be making any trade decisions basis on this. We will be making our opinion whether the market is going up or market is going down. Like as I said, in this chart, if you see on the Friday, right from the, let's say I'm just hiding this rest of the day. Okay, I am just looking at this point right now around 10:45 a.m. You know that the downtrend is continuing from even from the Thursday. It is getting continued over here as well. We haven't seen a single higher high. All these high are lower highs. So I know that the market is in the downtrend. What I would look for, I would look for a trigger where the retracement is happening next. So yes, there is a retracement signal over here, and come again a sell signal. Look for a sell over here while the live market is going on. So that means we will be taking a put. And if you see, these two areas were good enough because we had a pivot also, which will act as a resistance. So this is where I will make a decision that I am going to go for short opportunities. Now exact pinpointed entries will be on the upcoming chart, which I am going to talk after this one. So not the second, the third one will be the exit pinpointed entry chart. The second chart has a very significant impact of something which we are going to in terms of analyzing the squeezes on the Bollinger Band, and when to take entries on that. So let's go into the chart number 2. I am going to open the Bank Nifty futures chart once again. This is going to be our chart number 2. So first you will have opened always this one. Second, you will have to keep opened always. Let me just remove all the indicators. What I need: volume, I need pivot points, Fibonacci, I need Bollinger Band, William R and VWAP will be new. So volume I need, MACD is not needed over here, RSI is not needed, pivot points are needed, super trend is not needed, stochastic MTM is not needed. What I need now is Bollinger Band, Williams R. Bollinger Band would be 14 to Bollinger Band 14 and 2. This is going to be exponential. Done. And let me just edit a little bit. I don't want this to be filled. Okay, and this line should be white. Sorry, the gray one. So put a Bollinger Band, and next is we want it to be a Akinashi chart on a 5-minute time frame. Akinashi 5-minute with a Bollinger Band. Next is a Williams R default setting and a VWAP. Chart number 2 is ready. And how would you interpret this chart? Rule number 1, I would like to see Bollinger Band getting squeezed. Whenever Bollinger Band is getting squeezed on this chart, that means it is getting narrow. The upper Bollinger Band and lower Bollinger Bands are getting narrow. I would look for a trading opportunity based on this chart. Okay. So yesterday we spoke about this thing briefly, that how you can identify the candlestick patterns and triangles and all. So if you see over here, this is the chart on which you will be analyzing and finding exact points where the breakout is going to happen. So this is one area where the squeeze has happened. Along with the Bollinger Band, if you draw, you will be able to draw a triangle, and the squeeze market has into the consolidation zone for almost hour and a half, and then there is a breakdown below. Okay, so always this chart needs to be looked upon. Rule number 1, whenever there is a squeeze happening, there is a narrow range happening on Bollinger Band, I will look for an opportunity. Look at over here, I will look for an opportunity, a break up above the upper Bollinger Band, and then the see market, how market has reacted afterwards. So first rule, squeeze of Bollinger Band and a breakout after that. Second rule on this chart, I will be trading upside. I will be taking a call option if the price is breaking above the VWAP. So this is volume weighted average price, the red line over here, this one. So if my squeeze is breaking above, breaking upside, and if it is above the volume weighted average price, I will be taking a call entry. If it is breaking below and the price is below the volume weighted average price, I'll be taking a short entry on this. Both time when I'm taking the entry, the Williams R, rule number 3, the Williams R should not be in the already oversold or overbought zone. So if you see over here, it is going into oversold zone after my entry over here. So Williams R should be above -80 and below -20 in case of entry. Whenever I'm making the entry, it should not already gone into the oversold or overbought zone. We need that within the control basically. So if you see over here also, Williams R is just about to go in the overbought zone, but good enough to have an entry over here. Let me find another example where we have seen the Bollinger Band getting squeezed. This is another place. A triangle is being formed and Bollinger Band is squeezed and a break above. The price is above the volume weighted average price, and we have seen that even this particular item, the Williams R is also within just below the oversold range, and you can just take a entry over here. So rule number 1, plot a Heikinshi chart, and first rule would be to look for a squeeze on Bollinger Band. I should be able to draw a triangle. Most of the time it will be a symmetrical triangle, but it can be ascending or descending as well. And I will look for a break above or break below the triangle. If it is a break above the triangle, it should be above the volume weighted average price. And Williams R should not be already at the very high of the curve. If that is that these conditions are meeting, then I would be taking a long entry. For short entry, same, we will see a Bollinger Band squeeze. You should be able to draw a triangle. If it is breaking below, the volume weighted average price should be above the price, and Williams R should always within the range of normal range. Basically, it should not be oversold already. Then you can take a short entry. This is a 5-minute chart. You said that last session Williams R settings were changed to 50-50. That can also be done, no problem at all. You can change it to 50-50 as well. In that case, the rule would be basically you should be above the 50, -50 for a long entry and below -50 for a short entry. You can always use this one as well. Okay, so when you are taking a long entry, it should be above 50. If it is below 50, don't take a long entry. If it is above 50, don't take a short entry. As simple as that. And it will align actually. When you get a right setup, it will align automatically. So this is another long entry above 50. Go for it. This is a short entry. We are already below 50. Go for it. Okay. $11.15. What date you mentioned? I'm not sure. Let me just go back. 11:15, no squeeze. 11:15. Is this the one which we are talking about? No, I won't term it as a squeeze. No, this is not a squeeze. This we are in a bull trend already, and this is continuation of that trend basically. I'm giving you examples of right squeezes basically. This one is a good squeeze. Then this one is a good one. When price is confirmed in a sideways trend from quite some time, this is a good squeeze. So at least around 30 minutes to 1 hour, we should be in a consolidated range basically before we form this squeeze, and then later on it will break out. Now here if you see this is getting narrowed, but this is not a squeeze because I am not in a range right now. I am in a downtrend first, and if you see over here, though the candles are pretty narrow, but still this is not a consolidation zone. This is still going towards the downwards trend basically. And one very prominent way of identifying whether we are in a trend or not is the middle of the Bollinger Band basically. This is a 20 points, sorry, it is a 14 points exponential moving average. So if it is going downwards, we are in a downtrend. If it is going upwards, we are in an uptrend. If it is sideways, if it is horizontal, then it's a consolidation basically. So let me figure out if I can get another one for you, which is a good one. Look at this. This is also a pretty good squeeze. If you see, the price is more or less in a range from quite some time, though with bigger wicks, but still this is a good one. And then we saw some volatility and a break above over here. So a good trend pointer could have been captured over here in this particular candle over here. Let me see if I can get another one. This is also a good one. So we are in a consolidation. I can draw a, let me segment. Why it's not drawing anymore? Let me use this tool then. So in fact, from here on, you can draw a triangle like this, and then there is a breakout. Williams are aligned. Okay, this is in an invalid entry because of volume weighted average price is above the price. This is an invalid entry, guys. Don't take any such trades where VWAP is below your current, VWAP is above your current price and you are looking for an upside move. Though it has moved, but don't take these entries. This is the class example. Beautiful example over here. And then I can draw a more or less horizontal line over here. A good triangle formation, pretty narrow squeeze for a prolonged period with some wicks here and there, and then there is this close above the Bollinger Band. RSI is in place, Williams is in place and VWAP is in place. You can take a long entry over here on this breakout. Easy 10 pointer. This was a move on futures from 472 up till 549, approximately 70 points move basically. So a good 10 pointer could have been captured over here. But rules I have mentioned, note down them. Squeeze on the Bollinger Band. If it is breaking upside, price should be above the VWAP. If it is breaking on the lower side, price should be below the VWAP. Then you should also take the Williams R in the consideration. To make simpler the things simpler, let's keep it 50. Let me just quickly make the change over here also, so that when you get the material, over bought and oversold marked at minus 50. Okay, so that you will get it into the material also. We are clocking around 4 o'clock. Would you like to have a 10-minute break now? Okay. Okay, Prakash is saying that he is not willing to take the break, but let's go with the maturity. Uh, uh, 10 minutes break and I'll be back. Fine. So I'm now moving on to chart number 3. Before going there, let me just see if there was any question in between. Pratik, I did not get your question. Should we read in upper Bollinger Band and lower Bollinger Band before taking entry? No lines. Actually, you will just see the squeeze on the Bollinger Band. Okay, you will just have to see the squeeze on the Bollinger Band. Once you find a squeeze, you need to draw your triangle like this. Okay, so while I'm on this place, I will draw a triangle, and when I'm going to get a breakout on the triangle, that is what my entry point is basically. Okay, so this candle, if you see, this candle has closed above the breakout of my triangle, and this is my entry point. 31,472 is my entry point basically. So it can be filled on this candle, it can be filled on the next as well, but this is where I would be taking my entry. Let me just go to the chart number 3 so that will get yes, this chart is mainly on and only for breakouts and breakdowns. Let's go into the third one right now. And this is what the chart on which you will be trading most of the time. Setup number 3. And this is the 1 minute chart for a scalp setup. Okay. This is now we are actually pinpointing on the scalp only. 1 minute chart, scalp setup. I think you are going in deep in chart. Please explain all candlesticks, what it indicates. Yes, I'm going to. I'm yet not finished. Don't worry. Hold on. Okay, so this is 1 minute chart which we are going to work on now. I'm going to open a third chart now of Bank Nifty futures. Okay, and this will start with no indicators. Okay, so let's just remove everything. This is going to be a normal candlestick chart. Normal candlestick chart. Every day, at the end of the day, you will have to look at this chart. First thing which you have to do, now note it down. All the steps are not written in the presentation, so note it down. Step 1 is to move it on the 15 minutes. 15 minutes normal candlestick chart. Step number 2, shrink it as much as you can. Okay, make it as smaller as you can, and just within the screen whatever you can see, the maximum duration. So if you see over here, futures started trading from the April month. Okay, and we got it up till now. What I need, first of all, the same exercise which we did yesterday. On the naked chart, I want to mark all my supports and resistances. So how am I going to do? I'm repeating the step from yesterday. Just need to select the horizontal tool. Take the red color. These are going to be the resistances on the current, above the current price. So this is current price. Let's go up. Where do I find my immediate first resistance level? This is the place where I will be marking. 1, 2, 3 and 4 times it has been tested. If it breaks above, then we are actually breaking a resistance. This is going to be a resistance for me. I'm just trying to look more in the past what has happened. So if you see, this was a resistance, support, and now it becomes a resistance because price is broken below that. If I can find something else apart from this on above the current price, there's this one area, 1, 2, 3. I'll mark one line over here, and this is my second resistance level. There is nothing in between, even if I go up till April. So now I'm going upwards. Next from here on would be my resistance zone would be this area, 1, 2, 3, 4, 5, 6, 7 times tested. This is my next resistance zone. And then if I go further up, I find 1, 2 and 3 over here, 3 points. 1, 2, 3 points over here, and then let's mark one on this top. More than enough. Now we got 5 resistances marked on a very long term time frame. We are actually looking the chart right from April 2019 till now, so approximately 3 to 3.5 months chart. Then next I'm changing the color. Now I need to mark supports. These will remain as is till the expiry. So it is a one time exercise. We will do only modification or additions on daily basis once a day. So in the evening, you just need to sit. It will not take more than 5 minutes for you to mark if there is any new support or resistance being formed. Okay. So now below the current price, I could see the first point is this 1, 2, and 3 times tested this price. So let's see if this is below the current price. This is still above the current price. So this will be red. So let me do one thing. Let me just mark it this one as in below the current price. Let's remove this and make it a red one. This one is coming on pretty much the same level of yesterday's close basically. And we got this gap over here, which is at 29,711 will be filled. This is the same gap which we were talking on the spot price chart, which is on the 550 level. So this we got resistance over here and support over here. First one, second support is on this area, and third one is on this area. No, not too many data points over here because we haven't seen these levels from quite some time, and hopefully we will not see these levels even in coming days also. But let's mark just for having reference points for ourselves in the live market. Supports and resistances are marked now on 15 minutes. Next thing which I need to look on this chart is if there are any trend lines or channels I can mark. Okay, any trend lines or channels I can mark. Let's just don't go for the trend lines way too far in the history. Just expand it a little bit and see if you can find a trend line. So if you see over here, I got one. I could able to see one. Let's mark it with a different color. Right from this place, I can connect 1, 2, 3, 4, 5 data points. Okay, 1, 2, 3, 4, 5 data points. So any close above this trend line, I would consider it as an possible reversal of trend. This is the nearest one which I can mark, and this could have been a channel as well, very well. So it's up to you whether you want to mark it as a trend line or as a channel. So price should be moving within this channel. That's the expectation. If it breaks above, then we are actually changing the trend. So this is the recent one which I can mark. There can be another one which I can mark over here. So let's not mark it as a channel because it doesn't make any sense of making a channel now. The price is already gone past from this. So rather I would prefer to make a trend line over here. And this will continue in future like this. Okay, so if we are going to get a reversal, we might get a resistance over here and even thicker resistance if let's say price moves like this. From here on, price moves like this, then this will be my double resistance because of the trend line and because of the horizontal resistance coming from the left side of the chart. So far so good. Just give me a confirmation, guys. Great. Now for horizontal supports, 15-minute time frame is good enough. But for trend lines, I would also prefer to look at the 5-minute time frame ones. So I'm now drilling it down further to 5 minutes. And let's see if I can draw any trend line on 5 minute. There doesn't seems to be any which I could distinctively would like to draw just now. But for the sake of example, I am marking one on the 5 minute just so that how it should be done, you will get to know. So this is one trend line which I would definitely would have marked. And I actually yesterday in the session, I told that there was this one trade which we have taken on this particular date, the basis on this trend line. Then this is a parabolic move, which you can mark and take a reversal. There is one more which you can definitely mark and take a, see how beautiful this trend line is. Has been tested once, twice, thrice, and then this is basically climbing on the trend. If I mark it as a channel, you will be having a much more better clarity basically. So it's not always a very pinpointed price, but it's always a little wider range. So if you see over here, this is a channel. Once broke below, see the beautiful move downwards. So all these things we have to mark on 15 minutes and 5 minutes. Your preparation for pinpointed entries is done. Yes, it is not really a head and shoulder, this one, but for sure a channel breakout is there actually. So that's what we have to mark. Now on 5 minute chart, we will do this exercise of marking supports and resistances and channels and all on regular basis in the live market as well. Okay, as and when the market is moving and we could able to identify, we will do this. This is a bit of art. It will take a little bit of time for you to practice and identify these things. um, I'm not sure if there is any tool which can identify uh, easily all these patterns by automatically. There's nothing I have came across. I have seen some very sophisticated and costly tools which are available outside India, which could able to find supports, resistances, channels and all those things by themselves. But otherwise uh, it's not there actually as of now. Let me, okay, so flag, let me see a flag if I can find. Yeah, I can find one for you. uh, Here it is, the same channel breakout thing. Before that, you could have taken a flag breakout. So your flag will be formed from here till here, and then we got a decent flag right here. Okay, and let me just delete this thing. So when you got this flag breakout over here, got a 10 pointer, just go for a 10 pointer over here. Let me figure out if I can find more flags for you. Most of the time it happens during the early session, basically during first hour or so. Inverted one, beautiful inverted one. Flags are my favorite and I trade them quite a many times. I'll keep on sharing. When you will see my chart, you won't see these two lines, but this is how I would trade a flag. A beautiful one, this one. This is an inverted flag, basically a continuation of trend. And if you take a 10 pointer over here, you can easily capture it. I'm still showing you on the 5 minute time frame, but 1 minute time frame is what you should be drawing flags on. So that's what we are going to do next. Let me just remove them as of now, because these are not really 10 pointer. These are going to be intraday trades. Come on. Some problem with my mouse. Just give me 1 second. Okay, so now I'm moving on the 1 minute chart. That's where you will get a lot of flags and uh, real 10 pointers basically. So drill once we are done with this, all this, you just go for 1 minute, drill it down to 1 minute. Okay, now we are on 1 minute chart. So this is what we will be trading, and now we will look for all the supports, resistances, breakouts below supports and all. So if you see one beautiful trade over here, the horizontal support has been broken. Then let me just see if I could find a flag for you on 1 minute. I got one. If I'm not wrong, I must have traded this as well. This was on 17.7. Okay, so this is a 10 pointer. Let's just see on the 17.7 on the options chart. 17.7 is what? We won't be able to see the options chart on 17.7, but then let me just see the time. It's 2:32 on 17. We will see some of my trades as well. What was the rationale or what was the interpretation behind that? No, 17th I was not active at that time basically. But this is a perfect bull flag which you can definitely take up. So this trend line is confirming that yes, we are on the upwards slope. Pretty good impulsive move. This is a parabolic move, and then we got a retracement, and then we got a breakout. Now this 1 minute chart now will have some indicators to support us how we should be taking our trades in a better way. Okay, so let's go into the part where we are going to add the indicators on this. Volume is already there. Stochastic, RSI and Bollinger Bands we are going to use, and of course Fibonacci pivots. Stochastic MTM. Now this we will change to, I think I must have mentioned, no, this should be 60. And this will be minus 60. And show results. Overbought will be red. Oversold is gonna be green. These are the signals. This is not needed. Okay, so changes which I made is oversold is made as plus 60 and overbought is made as oversold is made as minus 60 and overbought is made as plus 16. Then we need to add RSI, which is of 2 period. Bollinger Band will be on this chart as well. Okay. Now combined this bull flag with naked eyes, it was difficult to identify this trade. But if I combine this with a Bollinger Band, if you see, we broke above, retraced, then there is a support identified already at the bottom, and now in the middle of the Bollinger Band, and now we got a breakout, a perfect trade. And most of the trending bull flags you will find Bollinger Band supporting. Every time when you see price is coming, like prices is on in the uptrend, came back, retraced, and found a support at the Bollinger Band, then there is a continuation. That is a good 10 pointer. Yeah, band, let's change it. Why, man? Something is wrong with this thing. Today, I guess, yeah, Zerodha had a upgrade yesterday, which might be causing all these issues. This should be 14 and exponential. Okay. So now it's little bit even better, basically, that you got a support at the 14 exponential moving average EMA. This middle line is 14 exponential moving average, and then we got a continuation with a very super bullish candle where it's open equals to low. Take an entry. Easy 10 pointer is given over here. Now I am going to tell rules for the pinpointed entries on this chart. This is the chart on which you will be doing the scalping on 1 minute. Note down all the rules. Note down all the rules. We'll be having three type of trades on this chart. We'll be having three type of trades on this chart. Okay, let me show you with another example in an downwards trend. Do not start your web cameras. More you practice, more you will find. Flag is my favorite pattern, by the way. Then this was on the 5 minute which we draw earlier, not on the 1 minute. So three types of trades we will be doing. First is trend continuation, like this. This is a trend. We are on the trend line right now. A trend continuation would be basically the market is in confirmed trend, and we would look for a retracement at the middle of the Bollinger Band. We would look for a retracement at the middle of the Bollinger Band. This is a pullback. We are in an uptrend. This is a pullback. We got a support on the middle of the Bollinger Band over here. Something is wrong with my mouse, looks like. We got one candle over here, which is a support candle, and then the trend continues. So whenever the Bollinger Band is upwards, going upwards, you find support levels at the mid of Bollinger Band, and when it is continued, you take an entry for 10 points. So trend continuation is first type of trade. Bull flags and bear flags are also trend continuation patterns. Okay, if we go back to the presentation, you will get all these on the yesterday's. Flags, flat tops and flat bottoms are the trend continuation trades which we are going to take. Okay, so Bollinger Band support is this, and when we talk about the candlestick patterns, we would be looking for flag patterns on this. This is one. Whenever you are going to take trend continuation trade, always look for this underneath two items, these two indicators. These should be cooled off. These should be not in the range of overbought. Okay, this is overbought. We are not going to enter anywhere in this range. Okay, when it comes down and take a support, we will go for an entry and we will look for 10 points. Same goes over here as well. Whenever we look for an entry, these guys should be at the low of the curve. So this is the support zone. We came low of the curve. Now finding the support, take a entry, take your 10 points and exit. So this is one. Trend continuation is always combined with these two indicators. Stochastic MTM and RSI2 should not be overbought when you are going up for a long trade, and it should not be oversold when you are going for a short trade. Candlestick patterns will be looking for bull flags and flat tops for continuation. It can be a bear flag in downtrend and flat bottom for a downtrend. Whenever you take a trade, either you are taking a taking the trade basis on the Bollinger Band mid support, or you will be taking a trade based on the candlestick patterns for trend continuation. The second type is a reversal trade. Okay, so reversal will always be taken basis on the fact that you got a horizontal range of Bollinger Band. Let me find one for you. Okay, so this is the consolidation or horizontal range of Bollinger Band, where you can identify very clearly that we are not trending, we are not in a trending market right now. Okay, we are not in a trending market right now. So it is a slope like this, but not a hugely trending market. So now whenever you see the market is in like this kind of range bound activity is happening, and not a very big volume is also there, volume bursts are not there, then you will be taking the reversal trades. Now key reversal trade points are, note down these things, or else you just when you are going to see the recording, you should be noting down these things in your notepad. We want to enter a reversal trade when both of these indicators are extremely oversold or overbought. The market is range bound. Let me find even a better option. Like this is a perfect range bound trade over here, which I am going to mark now. Okay, so this is a perfect range bound trade on this particular candle. We got price coming down, and on this candle, if you see, my MTM is oversold. Market is in uptrend so far, and now it is going into the sideways trend. It is oversold over here, and RSI is also oversold over here. Now I will take an entry when I see this particular range. In this range, you can take an entry of 10 points stop loss on the call side, and this move will give you 10 points exit before you reach to the upper Bollinger Band, because it is expected that the price will reverse from here. So whenever we are in a range bound market, price will be always moving within the Bollinger Bands upper and lower lines basically. So that's where we have to take the trades. Always look for extremely oversold or extremely overbought ranges on these two items. Let me just show you some more example of this. No, not here. Of late we have been trending like anything. This one was a sideways momentum day. So I got my price moved up, then there is a lower side of price made over here. This is the low which has been carried forward up till this point. So we went into a oversold zone over here, but not a good example because here it's not giving any entry. This candle could have been an entry point, but because this is where the MTM and RSI2 both are at the very low of the curve. We could have taken a 10 pointer entry over here, but may or may not have given the 10 points, because how much was the futures momentum? 585 up till 604, approximately 19-20 points move, may not have given the 10 points on the options chart. Let's look for some better example which I could able to figure out. This one is a very nice example over here. Mm, this candle. Okay, so if you see this candle, the MTM is at the very low of the curve and RSI too at very low of the curve. This candle is also representing a support area from this side. If you see over here, this was the low captured again. So I know that there is a reference point where the price taken support and went up. This reference point again coming, the same price is again coming, and I got already oversold on MTM and RSI. That means there is a reversal. We are in a horizontal range right now. Take a reversal 10 pointer entry over here. Take a 10 pointer entry on this candle as well. So this is going to be a call entry over here, and this is going to be a put entry over here. We are on high of the curve. We are on over bought over here, and 10 pointer is easily given on the sideways market as well. Type 1 entry, momentum. Type 2 entry, sideways. Type 3 entry would be breakouts. Breakout we have covered with the Bollinger Band on chart number 2. So that's what the breakout entry. On 1 minute, don't look for the breakouts, because there will be lot many fake breakouts, and no, whenever you are in the range bound market, don't look at the volume. Okay, because volume will always be, if you see over here flat, it is pretty much flat from here up till here. No difference in the volume, because we are in a consolidation zone. Consolidations are always with equally distributed volume basically. It's only the breakout and trending market which will have volume bursts. Yes, let me come up with the pivot point and Fibonacci part as well. Good observation. So I'm moving back onto the 15 minutes, and one more thing which we missed, which we have to make sure that every day we are doing, is to draw Fibonacci retracement on daily candle. Okay, so daily candle is like, this is 15-minute chart, this is one full day. Okay, I'm going to draw Fibonacci's on this now. So if you see this level, just the lowest price of that particular day, connect that with the highest price of that particular day, and you will have Fibonacci retracements in place. Now these are also key horizontal support and resistance levels. I'm moving back to 1 minute. So on Monday, I will use these Fibonacci levels also to determine where are the supports and resistances are existing. So if you see over here, this is 61.8 resistance for Fibonacci resistance, and we got a marked resistance as well nearby. So this is gonna be beautiful resistance zone actually. If at all Monday, what is happening now? This one. So Monday we can look at this area. Looks like a good resistance zone. So we got 61%, then there is a horizontal, then there is a 50% retracement, then there is a sloping trend line also coming on this. So if at all market moves up, this area would be the resistance zone for immediate resistance from 30,050 to 30,150 range. So these 100 points would be resistance zone on Monday, and we actually closed nearby the 100% retracement level. So if it breaks below, that will be a break of 100% Fibonacci level. That will be a break of a horizontal line, which is a green line which we have marked, and it will be a break below the Friday low as well. So if it breaks, then you can easily expect a real good movement up till 29,573 levels at the futures. That's the next level which we have marked on our chart. If we test this, we will be filling the gap which we marked on 15-minute chart. Okay, so Fibonacci needs to be there. Also, there is one more indicator which is pivot, which we have to add on this. Just for a reference, that do not take an entry if you see immediate resistance on top of your entry level. Just do not take a short entry if you see there is an immediate support at the just below your entry level. So Fibonacci's and pivot points both will be there actually. Did the pivot came? Yes, it is there. Fine. Now what next is as a next step, we need to go through many examples in the live market when we are taking the trades. I'm going to share my screenshots. You just need to watch them and see that what I'm reading. It will take 2 to 3 weeks time to understand basic setups, but this chart is the most important one for scalping part. Let me just see if there are more questions. Okay, which one needs to prioritize? There we don't have too many supports or resistances as such, because this is 1 minute chart, Nagendra. So all these supports and resistances will come at the range of, let's say, if let me see that what is my Monday chart says. My one support resistance is at 29,717. Next comes to 29,834. It is a approximately 60 points. Then the next would come on what level? Then the 61.6 comes, sorry, just 61.6 comes on, come on, a mouse is behaving weird something. So after 29.8, looks like we had some internet connectivity issue. I'm back now. Let me just check if the recording is still going on. And also confirm that I'm audible and my screen is visible. Okay. So we are back now. Let me just check recording is also going on. So despite drawing all these, you will get supports and resistances in the range of approximately 60 to 70 points. This is a zone basically, so that is why you are getting it much closer. But then if you see over here, my one is 29,834. The next comes to 30,036, approximately 200 points away. So on chart, it might look very close, but it is in fact around 60 to 80 points distance between one is to between multiple supports we have marked basically. Yes, you can use this same chart on the options as well. No problem at all. The same chart can be used on options. It's your choice. Now let's move on to the presentation back. Yeah, third type is a breakout trade type, which we have covered on the second chart. The breakouts will always be on the Bollinger Band chart only. Pivot is Fibonacci pivot. Now I am going into the intraday chart setup. Now before going into that, basically what you can do is save these layouts. You can save these layouts by click on view and save layout. Once you save it, the beautiful part is that you can have multiple charts on a single screen. So let me just open the Bank Nifty chart from some of the saved layouts. So on the display, I can click on two charts and I can click on Bank Nifty, click on done. This will open two charts simultaneously. Okay, and if you see over here, there are two different, this is the layout which we spoke about. And this is another layout which we, this is 30-minute, this is 5-minute chart. I have put in some additional indicators, so don't get confused with that. But this will open both. You can select from the view, okay, what view I would like, view, and select any of the views which you have saved already. So range bar is here, Heikin-Ashi is here, and the third chart will be in a different window, which is my trigger point chart basically. Now the beautiful part is that whatever we have drawn over here, all the supports, resistances, channels, everything will start reflecting on these charts also. Getting? So this is how you can have a single screen view of multiple charts. Most of the brokers will support such kind of view, but Zerodha is being like, I am personally using Zerodha and I am much comfortable with this. Now let's move into the intraday setup. So 5-minute Bollinger Band chart, this one, the second chart, is the key for intraday as well. Take all the breakouts on 5 minutes chart for intraday trades with 20 points loss, stop loss and 20 points minimum profit target. But then I will be sharing one more, which is for the pinpointed entries. So let's open this one. I'm going to make it clean. So just deleting all the drawings and indicators. Or let me do one thing. Let me load a fresh template. Okay, so this is 5-minute futures chart. All these support resistances and these things you can still keep on this chart as well on 5-minute. That will help you to make better decisions. But what you have to do is basically take a 5-minute Heikin-Ashi chart of options selected strike. Okay, so this is not the Bank Nifty futures. We will go for the options chart now. So 29,900 P is there, 29,900 P. I'm loading it now, the options chart, 5-minute. Make it Heikin-Ashi. Okay, let's, because for intra, we got one 5-minute chart already in place. This one. Okay, so now the next one I am going to use directly on the options chart and make it Heikin-Ashi. Both of them will be Heikin-Ashi. And then we will be plotting some different indicators on this now. Volume is there already. RSI 5 period, super trend 7.3. A 5 period RSI with oversold or about 50-50. Okay. Zerodha is getting crazy. It's not populating this chart beyond 11 a.m. yesterday, day before yesterday. Something is wrong here. No. This is July expiry, and it is not even for the full day. Now here it is appearing. There it was not. So let me just reopen it in a window, new window. Yeah, now this chart is coming full. 5-minute Hakenashi with RSI 5 and super trend 7-3 parabolic star. Then we will take super trend. Come on. Give me a second. Display Hakenashi 5-minute. Then we will be adding RSI once again now. It's gone. A 5-period RSI. 50-50 is the oversold and overbought zone. Then I need super trend. Default setting 7-3. Done. Parabolic star. Default setting again. Pivots Fibonacci. This is intra. Then I had one more indicator on this, which is not in the presentation. Just give me 1 second. A 13-period moving average, which is exponential. Okay. Now for intraday, the rule on this 5-minute Heikin-Ashi chart is just note down all the rules for entry. You have to use this chart directly on the options price, the strike on which you want to trade, which is basically going to come from the strike price guide. Okay, I will take a long entry only when my super trend is moving into green and very specific level. Okay, so what level that will be, that's what I'm going to tell now. Take a long entry when you see, rule number 1, when you see the super trend is going into buy mode after a at least 3 to 4 candles horizontal move of sell side super trend. I'm marking it. Absolute horizontal move from sell side super trend. This is a sell side super trend. Sell has been triggered over here, and if you see, sell side super trend has given a very horizontal plotting for 5 candles over here. So 25 minutes of horizontal plotting. This is my entry level for intraday trade. My level of entry would be this price. 27.30 is my entry level for this particular strike. When you enter on this level, so place a order if the price has went above We don't care. Place the order only on this level when you see the super trend has moved to the green zone. So this is my trigger candle. This is my level. Okay, these candles are representing the super trend value of these candles is representing the entry level, and then I will be placing an order only when I see that the super trend has moved into buy zone. So this is my trigger candle. On this candle we will place an order at 27.5 for my entry. So this is confirmation 1. Confirmation 2, whenever you are putting this order, your moving average of 14 period should be below the price. If it is above the price, don't enter in the trade. Rule number 1, my entry level is defined by super trend. Rule number 2, I will wait for a trigger candle. When the super trend has moved into the green zone, I will be entering after this. Rule number 3, whenever I'm placing the order, I will be placing the order at the limit, and my moving average should be below the candle. Parabolic SAR should also be below the candle, and RSI should be above 50. Okay, so rule number 1, level identification basis on the super trend. Rule number 2, wait for the trigger candle. Rule number 3, validate that my moving average, parabolic SAR, and 50 this RSI is above 50 period. 50, the 5 period RSI is above 50. Then I will take a entry over here. Since it is an intraday trade, we are actually right now on a very low price, but your exit should be below this particular, the stop loss should be below the super trend, which is going to be approximately 20 points. Let me see if I can get another example. This chart is such a pathetic one. Okay, so this doesn't qualify because the super trend is still sloping. I want a horizontal super trend for at least 30 minutes. Let me see if I can get, yes, this is a beautiful one. Okay, this is a beautiful example. So we are in the range of approximately 60 rupees price right now. It's still in our it's still, you can trade this one on the expiry day. 12/7 is the date. Let me see, 12/7. It's a Friday, so it doesn't qualify. We need to go for a higher strike. But let's assume that this is Thursday and you got a horizontal super trend. So your entry will be at what level? 68 rupees 50 paisa. You got a trigger candle over here. This one is the trigger candle. Place a order 68 rupees 50 paisa. We got super moving average and parabolics are both below the candle. We are at above 50. Good entry point 68 rupees 50 paisa with a stop loss at this will be my stop loss because this is the low of this candle, and just below the super trend 52 rupees will be the stop loss. How much we are actually putting as a risk? 68 minus 52 is approximately 15 rupees. 16 rupees is the stop loss, and then you can just keep on trailing. So it went up till 88. From 68 to 88, 20 rupees profit has been given actually on this particular trade. So if you are 20 is the max stop loss, don't go beyond that. If the price strike looks too volatile and 20 points stop loss looks too small, then don't trade that. Go for a lower priced strike. 20 max is the stop loss we will be keeping, and then 20 would be our first target. 20 points would be our first target. If that hits, de-risk the trade at there itself. Either you will exit with full quantity or 50-50 or 80-20 rule, follow that. Okay, let's see some more example like this. So this is another one, but if this looks very, very volatile over here, see the big wicks. I got 1, 2, 3, 4, 5, 6 candles with a horizontal super trend over here. So we always need to look where the super trend is getting horizontal for a 5, 6, 7 candles time. So you will know upfront that this is my entry level where the price is actually 70 rupees approximately. You will start getting to know that okay, at 85 I need to enter. Most of the time you will be placing a stop loss buy order for this. because you will be knowing upfront that yes, this is my entry level. The moment you get the trigger candle, stop loss buy order you can place, or even if the price has already went up, you can place a normal buy order with this price. In this case, our entry would be 85 rupees 14 paisa. So 85, round figure 85, and I am keeping a stop loss at exactly at 65. That's a 20-point stop loss. It did not give me 20 points in the profit for sure, because there was this one big spike, but still it went up to 96 rupees and then came down. So not a very good entry, because we know that this is already very volatile area right now. Our stop loss is too wide. Then there was like liquidity crunch over here, so chart is not right to trade on. But we will see much more examples of this in the coming days. Let me just see if I can put this thing on a another strike. Let's see 30,100 C for 1st August. We might have some liquidity crunch on this as well, but let's figure it out. This is also not loaded right. 30,000 C for July itself. This one is a good example. Okay, so 1, 2, 3, 4, 5, 6, 7 candles. We have seen a horizontal steady super trend. 657. Again, this is way too high a price, but still you could actually, for just for the example, because let's do one thing. We will because of this very wild move on Friday, we are not getting right examples, but Monday onwards I'll share some of the right examples with you whenever I'm giving a call, basically for the intraday trades. So 655 is entry over here, and take the stop loss at 582. That makes it approximately 56 plus 20 points, approximately 76 points stop loss. We are actually on way too high price right now, but that's fine. And from there on, you take an entry 555. 655 is your entry, and we'll look for approximately 80 points up move. So no stop loss over here. From here on, since the super trend is moving upwards, you can keep on trailing your stop loss. 655 onwards, it went to 780, which is approximately 80 plus 45 points. 125 points up move has been given over here. Let me just go back and check questions. Yes, scalping would also need to look into the level 2 order flow also. So whenever I'm doing the scalping, I would look for the order flow. Especially when there is a breakout, you will be getting a high volume and high order flow. Rapid orders will be coming in the direction of your trade. Stop loss, you can place a simple stop loss order once you entered into the trade, basically. Okay, your question is how to place a stop loss buy order. That's very simple. You place a buy and make it a stop loss buy order. So let's say current price is it's not showing. Let me just go and check what is the current price for this. So if you see over here, current price is 123. What I want, if the price hits 130 rupees, I want to have an entry into this. No, stop loss market orders will not be allowed. It's a stop loss limit order. So I will be putting when the price hits 129, trigger price 129. I want to fill my order with 130 rupees and place a buy order. Whenever the price reaches to 129, current price is 123. Whenever the price reaches 129, it will automatically trigger this, and at 130 it will be filled basically. So that's how you place a stop loss buy order. Market won't allow. I am not sure if Zerodha will allow market orders, of course. Kotak won't allow. Zerodha allows it, Kotak doesn't allow, and even the stocks will not allow. In Zerodha you can place market orders on options. So if you place market order, it will be triggered on 129 and it will fill anywhere between 129 to up till whatever price. So let's say I am putting a quantity of 2000 instead of this. So in that case, now I am talking about 100 lots. So 129 will be trigger. It may get filled at 129.5, 30, 31, 32. It may go up till that point, till the time your order is completely filled. But if you place a limit order, a stop loss limit order, then this is the mandatory price on which you have to be filled actually. So if enough sell orders are available, then your full quantity will be filled. Otherwise, it won't fill the quantity. Yeah, this is the range from between 129 to 130. You can put it 133 also. So then it will fill up till 133. Whoever is the seller from 129 to 133, they will be matched with your buy quantity and your order will get filled. So many more live examples of this will be shared now on in the students group. Okay, great. Now let's go back to the presentation. So fourth chart setup is done. Before going into the positional setup, I will be these are the few things or rules which you have to take care of. Then we will go into the positional setup basically. So first thing is live chart trading. Very important aspect which you have to take care of is avoid trading if you find a huge move recently and price is in narrow range from last 5 minutes. Don't try to jump into the trade. Let the consolidation happen. We will see if there is a trend continuation happening, then we will enter, or we will see if there is a breakout again happening after the longer consolidation. We will take the trade at that time. Avoid trading if the India VIX is positive more than 2%. That indicates a increased volatility and spikes might kill your stop losses. India VIX, you can put it over here in the indicators in the scripts and it will show you. So if you see on Friday it was 6.55% up, and you know that what kind of volatile and high movement day Friday was. So avoid trading, only trade if you are comfortable with the trend and if you are fine with how the market is behaving. If you understand that move, then only you should be. India VIX is basically volatility index of Nifty. It determines how volatile Nifty is. Higher the change, volatility will increase. Lower the change, volatility will decrease basically. So if it is going negative, then we will see that less volatility is there in market. If it is increasing, then we will see that this is a high volatility. So anything which is happening in terms of events, results, election results are coming, or maybe some big announcements on the global level, or if the other international markets are behaving very volatile, at that time you will also see that the India VIX is also. Yeah, significance of parabolic SAR, very good question which I missed actually. Parabolic SAR has this significance if you want to trail your stop loss on the faster term. So this is what the example we were talking about, 655. So if you want to trail your stop loss, rather once you are in a little bit of profit, and if you don't really want to give market such a width. See, if you keep on your stop loss just below this super trend, you are actually giving too much width to the market to come down and hit your stop loss. You might be ending up with less profits. Whereas if you trail your stop loss with the parabolic SAR. So first utility of this indicator was that whenever I'm entering, the parabolic SAR should be below the candle. Second utility of this is that I can keep on trailing my stop loss on parabolic SAR if I don't really want to give a lot of width to the market basically. So super trend is a little slower when it comes to trailing stop loss. Parabolic SAR will be faster, and if you see, if you trail it, you will exit on this particular candle with some handsome profits instead of market goes down and hits your trailing stop loss, which is based on super trend. Let me show you on this example as well. Here also, if you see, if you trail on the stop loss on the super trend, your trade will go longer basically, because you are giving market the width with which uh, it can basically play around for a longer period. So if you keep on the super trend, your trade will last long, but also your stop loss will be wide. So that's the difference between super trend and parabolic SAR. You can trail your stop loss with parabolic SAR as well. It is much faster an indicator, and it will help you to capture the reversal of momentum, if at all that is going to happen, much faster basically. So we will exit on the tops basically. How to keep trailing stop loss? You will place a stop loss order once you are entered into the system in the trade. So let's say buy order has been filled, then I will place a sell order, which is a stop loss sell order. Let's take an example. My buy entry is at 100 rupees, so I will place a stop loss at 90 rupees with a trigger point of price of 90.5 and place it into the system. So once that is there into the system, it will be available into your orders over here, open orders. So it will be appearing in open orders over here. Then you just need to click on edit and make it, instead of 90 to 95 and 95.05 or 90.5.5. When the price moves up further, you make it 100, bring it to the break even. Your entry was 100 and your trailing stop loss will be like this. Just punch in, it will go into the system as a trailing stop loss order. Then let's say price move to 120 rupees, then my trailing stop loss will be 110 with 110.5 as an trigger price. Put it into the system and keep on modifying it after every few minutes. PE strike price by example, PE strike price by example was this one only, but it is since last 2 days market has moved very widely downwards. That is why it is very low on the price, actually 27 rupees. This went from 27 to 300 rupees in a day and a half. But let's see if there are more examples where this is one, but then we don't have sufficient consolidation of super trend. I need at least 4-5 candles consolidation. This is one beautiful example on the PE. So 66-68 rupees is the entry price with a stop loss of, this we have discussed. This is the same where we had 16 rupees, 18 rupees stop loss, and then how beautifully it has given. The first swing high was of 20 points, and then it went up till 200 rupees as well. Okay, now going back to the presentation. Avoid trading if the price movement is sideways mode or a lot of wicks are there actually. So if you see long candles, smaller bodies and long shadows of the candles, do not trade on those particular candles, and avoid trading. Avoid trading if Bollinger Band is horizontal and very narrow. Okay, you can always take the trades which are reversal trades in during this point of time, but make sure that the Bollinger Band has, upper Bollinger Band and lower Bollinger Band has a significant at least 30-40 points gap in between basically. If it is too narrow, then there's no point in trading reversals basically. We need consistent uptrend or downtrend for long and short entries respectively. I have kept this thing on all the slides that the broader trend is your friend, and you should be always following maximum majority of your trades should be aligned with the broader trend basically. Now let me just see what is the time right now. Kiran, I have covered this 5-10 minutes scalping part, the pre-market analysis. That's where you determine that where the price is supposed to go. And then when I'm opening my day, but the first trade, my first trade would not be having all these indicators in place. It's a pure play price action and level 2 information. So level 2 you will get over here. Level 2 you will get over here on the market depth area. So let's say my interpretation in the morning says that the market is going to go up or market is going to fall today. So let's take in Friday's example only. My market and my pre-open analysis said that market will be in the first 1 minute, market should go up. Anyone recall the pre-market where we had all the stocks green? Bank Nifty constituents. Let me just show you. Over here, the pre-open market, the Bank Nifty, and this is Friday, by the way. Everything is green. So my first impression was that I should be looking for a C trade. Friday morning, by the way, I did not trade in the early morning. I was busy with something else, but this I would interpret. So if I am doing that, and if I see the Friday morning first 1 minute candle, this is the first 1 minute candle on 30,000 C. It went from 510 to 581. Let's take something which is of less price. 30,200 C. Friday morning. How did it went? It was also around 300 rupees. 30,400 C. Let's look at this. And the first 1 minute. You got open equals to low. That's a basic candlestick analysis you must be aware of. OHL, open equals to high or open equals to low, makes a lot of difference. And at the same time, you will be having level 2 also over here. Significant buying has been seen on this. So you can enter a call for first 1 minute. The interpretation will come from this information. This we have covered already. So everything was green, some good heavy quantities. Level 2 of bank, yes bank on the Friday morning, and then accordingly you take your first trade. So I will be ready with both C and P charts and entry orders upfront. Let me just try to log in into Kotak. It will take me, just give me 1 second. So I'm telling you what exactly I'm doing nowadays when I'm actually trading. So let me just add Bank Nifty. Bank Nifty futures will be there in my watch list. Everything is getting crazy. it can't load the bank nifty and it's saying that it is already available. Somehow it's not showing anything on this. Strange, its watch list is not working, seems like. Yeah, but what I wanted to show is basically I keep both 1C and 1P charts opened in front of me with a buy order window as well opened with my quantity. So if I'm trading 25 lots here, it's just quantity. In your Kotak, you just need to put in lots basically, and my entry price, which is somewhat higher than the last closed price. So if we see over here, the last closed price is 126. I will see that what is the uh, last swing high basically. So if you see, this is this is coming up. So I would put a buy entry at 135 approximately, a limit buy order, and just keep it as is. The moment I see that there is a level 2 information saying that the flood of orders is coming and price is moving up, I will jump in into the trade. On the students group, there is a live trade video is also being shared some time back, so that also can be used. Let me just see if it's there already. But anyways, I can share more live trades as well from my side. Yeah, this is what. So just it's a brief video, but it will give you good understanding that how I am executing my trades. So just watch it. It has no audio, by the way. So this buy order is already in place with the quantity. There was one video which was of the morning first trade as well. Let's just figure out if we can get that one. So this is the trend continuation. If you could see there, there was an, let me just pause it. This is the area where the price has tested once and then went back up. This is the area where I have put in my buy order once again. We have mid of Bollinger Band trading being treated as support. Let's see. It's a little bit longer video. In the first trade of the morning won't take this much time basically. So this was just a 3-pointer, I guess. But let me see if I can show another one. No, this is not the one. This is also looks like to be a trend continuation. Nope, it's not the right one. There was another one actually. I'm just missing that one also. Let me just see what is this. Nope. I did recall. Maybe I'm just not searching the right keyword. This is the first trade in the morning. Just watch it. So this is how I am putting my buy order already in place. Basically the window is in place. Just I would be looking at how the market is reacting at the very beginning. And in the other window, there is level 2 also open basically, which is not being captured over here. Yeah, this is one where I got struggled a little bit. I guess this will go down and then this will go up once again. Yep. So level 2 is going on on the bottom side if you see over here. So I saw that 137, 136 range saw some good buying, and that is what injected confidence that I should stay into this trade. We are back to the break even now. Yeah, break above the day high. And exited with 10 points. So level 2 will help you greatly in whether to stay in the trade or exit from the trade basically. And this is how you get the screenshots. But let me share more examples so that it will be easier for all of you to understand that how it is happening. It is a bit risky affair in the beginning of the day when you are doing this. Always be very careful. Is this one more? Let me just see if this is the same one. Nope, this is a different one. Let's just quickly watch this one as well. Let's just spend only 1 minute on this. This is a 41-second video. Okay, if you see my buy order is limit order has been considered on this price 150, whereas we are at 135 right now. The current closing price is 135. Let the market open. Yeah, I saw buying and I entered over here. My entry was 148.90, 55, 59, 65, 67, and we exited 69, 65. Quantity was 400. Approximately 21 points were being made on this chart, this trade. The analysis was from the pre-market. Here just the what is happening with the current price. I saw that open equals to low is there and I just jumped into the trade. Okay, good. So let's just move ahead. Guys, would you like to have a 5-minute break? Just give me a confirmation. Okay, just 5 minutes and we will be back again with the positional trading setup. Good. So let me see the question. Fibonacci retracement levels from yesterday's ending. Yeah, Fibonacci we have put in on the chart as well. And we will keep it on the chart of futures always. And this will be our ready reference for all the horizontal supports and resistances which are there. Yes. So retracement will be always on the 15 minutes, move to the 15 minute, draw it from the day low to day high. And these will be our reversal points either, or when it breaks, then it will be treated as a support or resistance. If you see over here, I'm moving on to the 15 minute. I have already drawn the Fibonacci retracement over here. So this 61.8 is the level, 30,037. Since the price is below this, right now it will be treated as a resistance. Same goes for, so this is the immediate Fibonacci resistance and this is the immediate Fibonacci support. It's 100% day low of yesterday, day low of the yesterday. Okay, so these are the key reference points for us. Once it breaks above this, then this will be treated as a support, and then the 50% resistance will be the next resistance basically. Then if it cross 50%, then 38.2 would be the next resistance for us. Next is volume spike. Volume spike is basically on 1 minute chart. Whenever you see a breakout, which is of more than 20,000, volume is more than 20,000, 20K, is the volume which I would look on 1 minute. More than 20,000 volume is the significant volume. You can add the breakout if you find that. That's basically the move supported by volume, and you should be taking that trade basically. Then next question was where did the chart went? Next question is do you use multi-screen to keep an eye on level 2 data? Yes, actually I am using two screens, 21-inch screens, and then of course multiple tabs on each screen. This can be done on single screen also very well, no problem at all. Level 2 comes over here in Zerodha, and in Kotak level 2 comes as per the video on the order window itself, the order pop-up itself. The level 2 will come over here. In Kotak, in Zerodha it comes on this particular place. Also in Zerodha, on the watch list also you can take the view of level 2 information. How to identify the active candle? I have covered this yesterday. This is something which will come from the practice. So to make your eyes understand that what kind of candlestick pattern is being formed, please use this indicator and watch it for in the live market for certain duration, maybe 2-3 weeks. You should be watching this as and when you have time. You will get to know familiarity with all the candlestick patterns basically. So then you have to practice it without looking at the indicator. You have to practice identifying the candles, what kind of candle it is basically. Little bit of practice is needed, but I don't feel that all the mainstream trading platforms would have such an indicator which is this uh, built on built by some user on TradingView. It is difficult. I don't feel that it is available with any other charting platform. Webinar is very much active, Shankar. Good. So last setup for the day, which is the positional trading setup, and I am going into that now. Stay focused. I think I have closed that, so let me just open it once again. Now for positional trading, I am putting in some conditions right now. Just don't do the naked one-sided trade either on futures or on options on positional basis, because we have to take care of overnight risks. We have to take care of any adverse moves. And that is why for positional trading, I recommend that you should be having a capital of approximately 2 lakh rupees to build this strategy, which we are going to talk about. If not, then do the other two types of trading and build your corpus first, build your capital first. By that time you can do this on the paper trade as well. Yes, yesterday someone asked me that where can I do the paper trading. I'm going to answer that as well. This is for educational purpose. As a disclaimer, I have put in over here. The bank nifty futures and options, we need to combine both of them to make sure that we are reducing our risk and not losing big money in the market. It is not advised to trade either futures or options naked without protection, without being any hedging. So we will be building a strategy which is more or less pretty much non-directional, but it comes in two variants. So you have to still analyze the market, the broader market on daily time frame. The analysis factors would remain same. The way we actually did the analysis on 5-minute, 15 minutes chart, you have to do it on the daily chart of bank nifty. So go to daily chart and figure out what is happening with the bank nifty right now. So if you see that right now we are in like a strong bullish bearish movement has happened, and we might see some sort of reversal or something basis on the information which we have compiled earlier, the open interest and all. You have to decide one bias, whether you are going to be a bull for this particular month or a bear for this particular month at the first week of every month. So the strategy kicks in the first week of every month, and the max duration would be up till expiry. So anywhere between 1 week to 4 weeks you have to carry your positions. Okay, now I'm going to give you lags of different instrument which you have to build on. So following steps needs to be done. In the first week of every month you have to buy one lot of bank nifty. This is for the bullish setup. Okay, this is for the bullish setup. So let's say swing trading, Rahul, is the same. Positional trading or swing trading are the same thing. Basically there is no difference, where you carry your position for multiple days. It can be anywhere between few days to up till a month or even more. Sorry. So let's take an example that on August 1st, 2nd, I would decide, basis on my rest of the technical analysis and open interest analysis for the monthly expiry, I am a bullish person. I would like to go long. So if you are a bullish person, then you will buy one lot of Bank Nifty future, buy one lot of put which is one strike below the current futures price, sell one lot of in the money option, at the money option, and call and sell one lot of out of the money call. Now let me configure this. Okay, so I'm going to use a tool called Sensible, which is a paid tool by Zerodha. I'm just refreshing it. Okay, anyone who is interested into virtual trade, you can use Sensible. It costs 800 rupees with the basic plan per month and 1300 rupees with the advanced full-fledged plan per month. It has a virtual trading platform which you can use for building your strategies and execute with the live market data without putting in the money. So this is your virtual portfolio. You can put in your scripts over here and trade them, and you can even place the orders also. This is a paid tool but worth exploring. Yeah, I know define of Obstra as well. That is there. It is already open. Okay, so let me just. So this is Obstra, and you get the same thing on the Upstocks also. So option strategy builder is available on Upstocks. It is available on Obstra, and it is available on Sensible as well. But rest two will not allow you to do trading virtually without money. These won't allow. Here you can build the strategy and test it, that how the PL looks like, but it won't let you trade. Whereas Sensible will also let you trade that particular strategy or setup which you are building. So you can build the setup over here and trade it live in Zerodha. And then there are multiple brokers with it, with which it is associated basically. So not only Zerodha, you can use other brokers also. And if you don't want to put in real money, you can do virtual trade also. So if you click on virtual trade, and you just need to log in with the Google, and it will take you to the virtual trade platform which we were talking earlier. So this is papertrade.sensible.com, which you can use. But now, as of now, let's not go into this. I'm just reopening it. I'm building this on Sensible. You can build on any other platform also. That's up to you. Something is wrong. It's not loading. Come on. It's some sort of long running script. Okay, so I'm back in Sensible and let's go to the builder. So first of all, I would be in the first week of every month. I need to do this. Go for Bank Nifty. Add a leg. I will be adding a future slot for 29th August and buy it. Let me just see if there is any question. Then the second leg we are going to start by buying a put. Okay, so if we are bullish, and that is why we bought the future slot, but then the hedging part comes into the picture. So I am going to buy one put which is one strike below the current futures price. So if you see, current futures price is 29,875. So one strike below would be 29,700. Okay, not 800. 700 is what we have to buy, and that is also of 29th August. Now, to make it non-directional and hedge it further, I'm going to add two more legs over here, which will be of the sell side, and we will be selling the calls basically. So first will be add the money. Add the money is now 9,774 is the rate, 75 is the rate. So add the money call will be of 29,900. 29,900 is the add the money call of 29 August. Add one. And sorry, just we need to sell it, not to buy. Okay, so I sold it. I'm going to sell another call which is of out of the money. Sell one lot of out of the money call which is at least 10% away from the current futures price. So from here 10% would be how much? 875, approximately 900. So 29 900, 30,000, 31,000, 30,100, 30,200, and 30,000. Yeah, 30,200 is the 10% away from here. So let's add another leg. I'm going to sell a call which is of 29th August expiry, 30,200, and add it. Okay, now I have added all this. So here you will see how much money will be needed. Okay, so your total requirement would be approximately 1.77 lakhs to create all these legs. Okay, and now we will be doing the adjustment part on the time. Okay, so let's take an example that I am going to carry my position for the entire month. I am slightly bullish from the current price. Okay, so I'm slightly bullish from the current price. If the price remains as it is up till 29th August, I will be in the 5,751 rupees profit. Let's move the price. Here you will see that what will happen with your position if the price goes upwards. So here comes the 30,000, and up till 30,200 you will be having 8,000 rupees, 51 rupees, 8,051 rupees profit, which is 4.62% on your deployed capital. So this is a max profit limit over here. If you carry this position as is, and if you are hitting 8,000 rupees profit before 29th August, any date, say week 2, week 3, if you are hitting this much profit, close all the legs and exit from your position. with 8,300 rupees profit. So anywhere between 1 week to 3 weeks time frame, if you are hitting this much profit, exit from all the legs, close that position for that particular month, and then we are not going to do anything with our position. God forbidden, if say market is going down up till 29,710, which is basically approximately 150 points from this current futures price, your still your loss is protected. Sorry, your profit is capped up till 4,551, and beyond that it will be frozen. Your profit will be frozen. You can see this with the strategy. So no matter how much market falls, we are protected with this put buying, and we will be collecting these two calls premium 100%. So till expiry, if the market remains over here, so we will be collecting this 480 rupees and 365 rupees. Both of these calls we will be collecting the full premium, and our loss from the futures will be protected against this options buying basically. So this put has been bought just to protect if there is any negative move on the futures. So 4,351 is the capped profit if the market goes against you. Where can you go in the loss in this strategy? So you will go in the loss part when the market moves up further, and your break even will come at 30,600 rupees approximately. So from here, if by August expiry, Bank Nifty moves approximately 725 points up, then your break even will come. Okay, at that time we will do some adjustment into this strategy. Even if you are staying in the strategy at that time, we will do the adjustment part. So we will go into the adjustment part in the document now. Yes, Ashok, just don't jump into the questions before I complete it. Okay, so it has an unlimited loss potential if you go beyond with this position 30,600. Beyond that your losses will start increasing, and that can go up till a huge one actually. So we have to, this is the protection point for us. This is the alert. Either you exit fully or from your position, because and we will exit a lot before that, because our max potential profit is 8,351 on this position, and if Bank Nifty moves upwards, we will for sure hit this area between 29,910 up till 30,200. We will hit this area depending on what date it will come basically. So we will hit this much and we will exit. Even if we don't, then here we will have a protection point once again. So that's what I am going to cover now. So this is a multi-leg strategy. What happens if the market goes upwards? Okay, so when the market goes upwards, you will be always in a good profit up till certain extent. So if you are anywhere hitting around 5%, you should be closing all your legs, close the entire position and exit for that particular month. We will enter again on the next month. Okay, if you do not square off and you want to do some adjustment, then these are the possibilities of adjustments. Okay, so this is example of upside adjustment. You purchased Bank Nifty futures at 30,000 rupees, put at 29,900 at 170, 30,000 put at 225, 30,300 call sold at 100 rupees. So these are the four legs I originally initiated. Now 300 points market moves upwards. We will take it into the practical scenario now. So from here, market goes 300 points up, which is basically approximately 30,200. So this is where we will reach on this call. The spot reaches on this call, basically the futures price, sorry, not the spot. So what will happen? We will be in 300 points profit over here in the futures because it has increased, and we will be in approximately similar loss on this call. Approximately similar loss because this is the selling. Not exactly 300 points will be the loss. Approximately 250 points will be the loss on this, because due to time decay, this premium is getting reduced. So when we are actually moving upwards, this will increase, but not with the speed with which the futures price is increasing. Getting my point? If futures increases 100 points, this call will increase 80 points only because of the time decay. So you will lose approximately 250 points over here, but you will gain 300 points over here. So net with these two legs, still you will be in somewhat profits. And now we are sitting on 30,200. We need to do some adjustments. So your first adjustment will be the 30,300 call. You will be squaring off this call. 365 call you will be squaring off. Approximately loss on this will be approximately 100 points loss will be on this point, this particular uh, leg. So you book 100 points loss, and then you will sell 30,600. So you will sell another 10% upside call. So in that case, I will square it off and I will sell 30,500 call. Same, I will be collecting approximately 300 points at that time as a premium, and then I will wait for a reversal. Even if that doesn't comes and another 300 points upside move will happen, we will lose approximately 100 points again on that call, 30,500 call, and square it off and sell another 200 points call. With this, what is going to happen is basically everything. So it is explained over here much better basically. So if it is goes to 30,600, we will again square off the 30,300 600 call, and 30,700 calls, two lot we will buy basically. Sorry, two lot we will sell. So 100 points I lost over here, 100 points I lost over here, and I still sold two lots with at RS approximately 100 rupees. So I will collect 200 points over here, which I have lost over here. I will collect them. So I will keep on selling every 300 points. I will keep on selling the next 300 points call. Eventually market will stop somewhere and I will eat the entire premium of that call, which will recover the losses which I am making on this particular leg. Are you guys able to follow so far? Okay, so this adjustment is very, very important. I am making 100 points loss every 300 points move. I am making 100 points loss over here, and those 100 points I am collecting with selling another far OTM strike, which is 300 points away basically. Eventually that will become zero and I will recover loss on this particular leg. So when the market went beyond this point, this is going to be in loss, and that will get compensated with the futures increment in the price. This I am going to collect, whatever losses I am going to get, this I am going to collect by selling the further far strikes, far OTM strikes of future options calls. This is the only point where it will be the put would be basically become this is going to be deep in the money put, so it might be increasing a bit, but then net I will still be managing my position in the profits. There is very less chances of losses if you are adjusting your positions accordingly. Never ever change anything onto this put side. Don't change anything onto this put leg. This is remaining there till the time expiry happens or till the time you exit the full position. This is the protection against your futures. So if at all futures starts dropping at some point of time, this put will increase in the price like anything, and that's where it will compensate your losses from the futures position basically. Next is what happens when we are going downwards. So put, we are not going to change there is a calculation. We bought at 30,000. The put was of 29,900 at the price of 170, and these two calls we sold, so we premium collected these two. So this becomes 270 minus 355. So net 55 points loss. That is the maximum loss which we will be incurring at any point of time. If you see the over here in the short side, you don't need to do any adjustments. If the price comes down, your profit will be locked at 4,300 rupees even if the market goes 2,000 points down. So not major enhancement needs to be done in terms of loss recovery. What you can do is basically you can maximize your profit. You can even have further profits by squaring of your call side. Okay, so when the price goes down, say 29,700, both of these legs will be of good profits basically, because we have solved it now. So premium will decay like anything. So we will square of this 30,200 call and start another leg of 30,100, which will have a little higher premium, and we will start eating that premium also. Market is going down anyways. Then another 200 300 points down, we will be selling another call option. So what you should be selling has been mentioned over here. If it goes down 29,900, this call we will be selling, squaring off, and then we will square off the next one, we will square off the next one. Like every 100 points drop, you just keep on selling the call. So this will keep on coming down, 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 and the premium decay we will be eating basically, and we will keep on booking our profits basically. And again, same rule applies even if you have waited for your position over here. 4,351 becomes 2.5% on your deployed capital. By selling the calls of nearer strikes, you will be eating more and more premiums. The moment you get 5% plus return on your position, exit. So that's the rule basically. Then there is an adjustment of down move and up move both. The logic remains the same. When you have down move, you will be keep on booking your this leg, book this leg, profit of this leg, and then short another nearer strike. Then if it moves down further, book profit on this leg and short nearer strike. If the market reverses and comes towards upside, again you need to book loss on this leg. You need to book loss and short a higher strike. So logic remains the same. Whenever we are going downwards, we will be keep on booking profit on our sold calls. When the market goes up, we will be keep on booking losses over here and keep on shorting the higher strikes basically. So far able to follow? Good. So this document covers all these scenarios very carefully. What I want you to, at least for 2 months, you should be doing this exercise with the paper trading. Okay, so you should not be putting a strategy. You can configure over here or in Opstra or even in Upstocks. But what you have to carefully do is adjustment part. Every 300 points move, you will need an adjustment. Upside, every 100 points move on the downside, you will need an adjustment. When it is upside, we will book loss on this leg and short a further away strike call. When it's downside, we will book profits on this and short a nearer strike call. So all the adjustment will be happening on this leg only. This remains as is, this remains as is, this remains as is. Okay, now exact mirror opposite of this you can do for when your analysis is biased towards selling. So you are negative about the market, market will go down, you sell a futures lot, you buy a call, and you sell 2 puts. You want me to configure that right over here? I can configure it. It will take 1 minute only. So I am biased towards shorting side. Bank Nifty had a leg, August, futures, sell. Okay. So I sold futures position to compensate any losses. Sorry, something went wrong here. I need add a leg, futures, sell 29th August, added. Okay, so sold. Now I need, if market goes up, I need a protection over here. So I will be buying a call which is of 100 points above than this. So 29,900, 30,000 is what I am going to buy for 29 August. Added, then add a leg. Now I'm going to, sorry, it is again something, yeah, that is correct. Now I'm going to sell puts. Sell at the money put. First will be at the money put. At the money is what? 29,900. Sold it. Then I'll be selling at the money put, sorry, at far OTM put at 300 points away, 10% away. So sell a put which is of 29 August and 300 points away. So that will be 800, 700, 600. Added. Now we will carry our positions for till the expiry. So exact mirror opposite of this has been built over here. So here your profit was capped when the market was going down. Here your profit is capped when the market is going upwards. Okay. So current price, current market is this. If market remains here itself till the expiry of August, we will be in profit of 9,900 up till the point where the market is staying around 29,600. Then also we will be maximizing our profits. If it goes further down, then our profit will start reducing. So on the overall position, you will need 1.63 lakhs margin and 6.6%, 0.6% is the max possible profit. If the market goes against us, 7,900 is the capped profit that will be there even if you don't do any adjustment. The adjustments over here will be on the call, on the put leg, basically on this leg. Further the market goes down, we will be booking losses on this and we will be keep on shorting further far strike puts out of the money puts. If the market goes in the positive, what we are going to do, we will be booking our profits on this leg and keep on shorting 100 points above. So every 100 points above, we will be booking this profit of this, because market will go 100 points up, we will book, this will become 417 to 350 and we will book our profit. Just give me 1 second. Hello. Yeah, just give me 1 minute. I'm sharing once again. I hope the audio is clear. Yeah, just give me 1 second. Let me know once it is back. Good. So I hope that when we actually on the bull side, when we configured this entire setup, you were able to see the screen. Okay. When my bias is towards short side, this is what I have built. I guess this is something which you have missed. So I sold one lot of future. I bought 100 points away. So this future is 875. So 30,000 call I bought as a protection for market. If goes against me and it doesn't falls further down, then this is what I have bought. And then these two legs on the short side of put. One is at the money put has been shorted and the other one is OTM put, which is 300 points away, has been shorted. My max profit is 9.9k, which is 6% on the deployed capital. 1.63 lakhs will be needed over here. And this is more or less worry-free trading up till market. If goes upwards, my profit is capped to 7,900 rupees. I don't care even if I'm not doing any adjustments. If it goes down up till 29,150, which is approximately 800 points, 700 points down from here, I will still be in profits. I will go in losses only if that falls further down. I can maximize my profit once again over here by adjusting this leg. More and more market falls, I will be actually, when it's going down, this will increase basically, not with the speed with which this will decrease, but it will increase. So I'll be keep on booking approximately 100 points loss, and I'll keep on selling my puts which are again far out of the money, 300 points away. I will be again selling. I'll collect some more premium there. Some point of time market will stop falling and I will eat those premiums. So whatever I'm losing on this leg, I'll be earning by expiry by doing this adjustment of selling again 300 points away puts. This you need not to change. Any loss happening on this will be recovered with the profit happening on this, because we have sorted the futures over here. Okay, go through the document carefully, build the strategy yourself, at least 1 or 2 months, observe and do the adjustment and see how good returns it is giving. Do not expect 20, 30, 40% returns. That may be possible to have, just if you need to, if you could able to do the adjustment at the right time in the right way, then definitely your profits might be even further more. But with this basic configuration, the first configuration of the strategy, you can see that how it is going to perform if you are going to keep your position up till expiry, and if the market behaves between this range. So what range I am covering? In the short side, 29,150, and there is no limit on the long side as of now. With this configuration, exact mirror opposite of this is the other one basically, and the difference of profits you are able to see is because of the premiums which we are getting. So put side premiums are higher right now. We have seen a bloodbath in last couple of days. Because of that, put side premiums are on the higher side. So anywhere between 4 to 6% can be realistically expected from this strategy every month on your deployed capital, without carrying much overnight risk and all those things. I am capturing at least 1500 points movement. Still you will be in the profit. 700 points down and 700 points up, you will be in good profits. You will not go into the losses. This much is the range I am comfortable to trade with in the bank nifty. Even bank nifty goes anywhere beyond that, we will do the adjustment in our position and make sure that we are not going into the red as such. Maybe your profits at 1 month can be less, 1%, 1.5%, but rarely it will happen that you will end up in the losses. It is not going to happen until and unless you are managing your trade. So suggestion is to basically go through the entire document carefully, configure yourself. If you have any questions, doubts, ask those questions. I will be happy to answer. But this is something which you can trade worry free, even if you are not able to monitor market on a daily basis. Have any good application which will give you a trigger whenever the bank nifty is going 300 points away from your entry. Okay, so you need to have an alert system which will tell you that okay, this is the time when you should be looking for an adjustment. Otherwise you can worry free, you can keep your position without watching the screen full time. Nagendra, give me an example where gap up or gap down happened more than 300 points in the past. Yes, monthly realistically 5% you can expect easily on your deployed capital. Bank Nifty won't give you more than 300 points gap down or gap up at any point of time. And if that happens, then it's still your loss won't be that big. It is depending on the which side it is happening. So let's say if you are on the bear side, if you are on the short setup, and the market gap opens up 300 points, I don't care even if it's 2000 points gap up opening. I don't care actually. The only concern I will be having is, let's say 300-400 points gap down opening. In that case your profit will be less. You need to decide whether to further adjust it, or with lesser profit you would exit from your position. So you need to take a call at that point of time, but rarely it will happen like 300 point plus gap up or gap down. That's the only one example which I could see on the 15-minute chart is the gap which we are talking about. So let me see on the hourly chart. So there is no such gap as such. The only gap which we are actually looking at right now is just the below side over here. That's a big one. Where did it went? I had marked it, no? Where it is? It's way too far away. This is the gap. I guess this is election day, 21st of May. So we had a gap up opening of from 29,725 till 30,300. So approximately 600 points gap up. Result days we will be if you see we you know the information upfront. Don't carry your position for any such event. Okay, that's the protection we have to use. Otherwise, without any such big event, this won't happen for sure. Yes, yes. If you are doing adjustment, so there is this scenario captured into the document as well, that what will happen if there is a down move and then up move, and what will happen if it is up move and then there is a down move. So yes, market can give you surprises. You will have to do adjustment. If you are doing adjustment, you will have to do adjustment on the both sides. Okay, you can't just be doing adjustment on the one side. If market is going down more than 300 points, we will be doing the adjustment towards the downside. If it is going upwards 300 points, like it takes reversal and again comes up 300 points, we will be doing the second adjustment also. That is mandatory, that we have to do, and that is what will maximize your profits basically. No, adjustment can be done on first week, second week, third week. Till the time you are carrying the position, you can do the adjustment. And of course, it depends on the market movement. Good. So next step wise, let me just go back to the presentation and see what is left there. How you can improvise basically. Yes, to start this strategy, we need a significant premium on the two legs of calls which we are selling. Okay, where you get the higher premiums in the beginning of the month basically. So that's where we have to short, and we have to just keep on waiting for premium decay. Don't start this strategy in the second, third week or fourth week of the month. First week is where we will be collecting premiums on the calls, and that is where we will be collecting higher premiums, and that is what we are going to eat up during the day, during the month, and that is why we need to start it in the first week. Okay, how you could improvise on day by day basis. Note down your each trade analysis, what went wrong, what went good, and also analyze those things. Don't repeat your mistakes. Keep on doing good things which you are doing. So I don't care if you are earning from scalping, if you are earning from this hedged strategy of positional trades, or if you are earning from intraday. I don't care about that. What I care about is ending your days and months in green, learning your own lessons and improvising day by day. Keep on doing good things basically, keep on repeating good things which you do. Scale it up slowly. Don't just jump in with lot of money. Don't do analysis paralysis. Don't be get bogged down with complicated things and overly complicate your own setups and all. Stay simple and stick with what has been taught, and your journey has just now started. So we will be having much more experiences, lot many experiences in coming days. Nagendra, I did not get your point whether we need to look for a specific credit. What do you mean by specific credit? Okay. Having said that, you can also do adjustments as per your liking and personality in any of the setups which I have taught. Not necessarily need to stick on that. But before doing any adjustment or changes, you just need to make sure that that works. Okay. Do not overly complicate things which doesn't work. So tomorrow, if you come back and say that I have added 5 more indicators in my setup, uh, and you say that it's working good for me, I will ask questions that why you feel that this is needed, what is your interpretation out of it, and why you feel that this is an enhancement. Okay, so please make sure that whatever changes you are doing, those are backed by the information, data analysis, and your own observations, documented well. If you are hitting 5% in first week, close the position and don't start anything for that month. Okay, that's what I would suggest or advise, because once you are hitting 5%, either you exit or you keep the same position for higher gains. It will be far easier for you to do the adjustment in the current position itself. If you close it and start once again overall, then you will be collecting less premiums on those two legs where you are selling basically. Okay, I am taking a pause for 2 minutes. I am more or less pretty much done. Last point which I wanted to convey is on the wealth creation part. So of course all of you are putting is all this hard effort to learn and to adapt things to earn money. So at the end of the day, all of us takes money at our home, and that's the aim. But be very very realistic with what your return expectations are. This is not wealth creation, this is income creation, just like any other job which you do day in day out, or the business which you guys are doing. Trading is also a business. You will not become Warren Buffett by doing trading, but you can very well earn a handsome regular income. Here you will have to put your effort, so it's not a passive income basically. So while you are sleeping, you will not be earning. You need to be awake, you need to be in front of terminal. But the objective is basically to earn some real good money from doing all this effort, and then put that money to on work where it can grow and it can be a passive income for you. I don't care which instrument you are using. It can be mutual fund investment where others are taking care of your portfolio. It can be real estate investment. It can be some fixed deposits. It can be some other schemes basically. But always make sure that the financial freedom will come basis on what you are doing with your money. So your money should earn more money for you, then and then only you will be financially freedom. Otherwise, this is hard work. You have to do day in day out. Keep on doing that, and this will give you regular handsome income. But it won't make you a Warren Buffett. That I can tell you. For that, you need to do proper investing, where while you sleep, money works for you. Good question. When you will be added for the students group, you will be added for the student groups once you send me a feedback of the training so far. So about material, about 2 days session, you send me a feedback on Telegram or WhatsApp. That's where we are already connected. That's where you got enrolled. So you send me a feedback there, your real feelings. How did you feel about the training? All the good parts and bad parts as well. If there is anything which needs to be improved on, you can tell me, and then I will include those things in the future upcoming sessions. Once you share the feedback with me, I will give you token for the entry of students group. So you can do it today, you can do it tomorrow, day after as well. No hurry, no, don't just be very impatient to earn money and to trade. Learn. Even if it takes 4 days for you to give me feedback after watching videos, that's absolutely fine. Okay. uh, uh, this question, where did you transited from a day job to trading? How? This is a very interesting question, and a lot of people ask me this question that I want to quit my job. And I tell them that first of all, you need to determine that before quitting, forget about the question of quitting your job. You need to protect that first question, which will come next is that from where you are gonna earn. So if you say that I want to earn from trading after quitting my job, then I will tell you that what is your potential right now. How many days you have traded, how many months you have traded already. Can you claim that you are a good trader? If you can claim, give me the show me the percentage return you have earned. I don't care whether you are earning with 10 lakh rupees or you are earning with 10,000 rupees. I want consistent percentage return on the deployed capital from your side. If it is good enough, even with 10,000 rupees capital, that will make you a good trader, and you can think of quitting your job and do the full-time trading. Okay. And then there is another good thing which I always tell everyone, that there is nothing called full-time trading. Market is open from 9:15 to 3:30, and beyond that you are free to do whatever you want to do. So as a trader, you need to make sure that you are doing multiple things. Trading is an inconsistent income. One month you might hit 2 lakh rupees with a 5 lakh rupees capital. Next month it might be 20,000 rupees only. It is an inconsistent income. So you need to first prepare yourself to live with a inconsistent income. There can be setbacks as well. So you have to prepare yourself first to live with that. If you are absolutely fine doing that, then you can jump into the full-time trading part. Despite doing that, always make sure that you are having multiple earning sources. Why I am conducting this training right now? Why I am speaking for 10 hours in a stretch? Because there is a earning associated with that. Open up multiple earning venues for yourself. So if you ask me, are you a full-time trader? I will tell you, no, I'm not a full-time trader. I am a full-time trader only up till the market is open. Beyond market, there are multiple activities which I am doing, and I'll keep on doing that. So whatever I'm earning from market, I could, like, people say me, ask me this thing, that you can very well manage a portfolio of 25 lakhs, 30 lakhs, 50 lakhs as well. Even some time back, someone offered me a 5 crore rupees portfolio, that you trade on my account, which is of 5 crore rupees. It was a portfolio management service basically. And I said, no, I don't feel comfortable. What I'm comfortable with is the quantity which I'm trading right now, and I'm slowly scaling it up. But I am not in a hurry to manage a 25 crore, 5 crore rupees portfolio, because I will be answerable to someone that will put in some pressure on me to perform. And when you are actually trading in pressure, you will never be able to perform. So you need to be absolutely free from your mind and from any obligations. If you got a money which is borrowed, if you got a money which you can't afford to lose, don't trade. Your decision making power will be reduced by many fold, and then you will commit wrong trades. So don't do that. Always have some other ventures. Market is open, the world is open. Do trading for 2 3 hours, 4 hours, and then you can do some other venture as well, from where you will earn. So if you ask me, I'm doing too many things basically right now. Upstocks, a lot of you guys are associated in Upstocks under my referral. That is one of the earning source. I'm doing these trainings. That is another one. I'm doing trading day in, day out. I'm having other lot of other things, a YouTube channel, a Twitter account. I'm associated with some other people related to market, from where I'm earning something. I'm doing consulting work as well. I do investments as well. So yes, there are multiple sources of earning, and that is where I feel much more comfortable. Trading is not the end for me actually. Even if I'm not trading on a day, it doesn't make any difference for me. So don't make it as an obligation. Don't make it a full-time single source of earning. It is inconsistent, and you might have some setbacks in between, so you need to cope up with that. So that's my answer on that. A little longer, but that's what I would suggest to everyone. At least have 6 months of profitable trading experience while doing your job. And that is why I am covering all sort of trading. You can do scalping with your job whenever you are finding it. So set up your job in such a way. I got one guy who actually worked from like in a shift, and every day morning he would trade for 1.5 hour only, doing handsomely good work. He's earning like anything. He's like, when many a times he told me that I don't want to do my job now. Always say him that what is stopping you from earning from both of the sources? You are doing trading and you are doing job and you are earning from both sides. Why would you like to stop one thing? Keep on doing the same thing for another 5 years. You will be retired. You don't need to do any of these two things. You will have enough money in your bank account so that you can get retired and you can enjoy rest of your life. And he's a young guy, 27 years old. So that's how it is basically. That's how you should be treating. Good. Any other questions? Quickly, another 30 seconds. If you have questions, then ask now, else we will conclude. No one can be a good trader without bad experience. No, you will have bad experiences in and out, no doubt. Even I have bad experiences still now. And that is why I told this thing in the training, that look at your returns in terms of percentage. One, look at your returns in terms of a significant longer duration period basically. So if you are a scalper, you should be looking your weekly contract notes, weekly statement of your contract note, and you will see that, okay, if you are ending in green, that's a good part basically. And not necessarily people who have bad experience will turn to be a good trader ever. Some guys would always remain bad. So discipline is the part which will fix those problems. And then of course this end-to-end setup which we have covered, this will fix the problem. So of course bad experiences will be there in between, but we need to minimize them. We need to make sure that those are very less. There is no link for feedback. You just send the feedback on the WhatsApp or Telegram. We are already connected there. Yeah, scalp setups basically, I have covered it with the enhancement part is something which we are going to now on covering into the student group with the market structure which I covered yesterday. Okay, so there will be some changes into the market structure. We will be having a lot of live market examples. Basic chart setup for scalping remains same. You guys are well versed with it already, and practically it is working fine, so I don't want to disturb it a lot. But with the market structure we will combine some things. I will share a lot of examples with you guys in coming days. Further to this, if you have any more questions, you can ask those questions on WhatsApp or Telegram anytime. I will try to answer all of them. But if you want to, if you have a consolidated list of let's say 5-7 questions, and if you want to have a call, we can have a call one-on-one as well, as and when needed. We will be regularly connected into the student group once you get the entry. Now on, you need to run the show for yourself. I hope that I have covered whatever is needed to be a successful trader. But still, if you feel that there is something, and specifically on the bank nifty part, but if you feel that there is something which is already left, which is left and which should be part of the training, then definitely you should tell that to me. If needed, we can have some additional session also in coming days, depending on the availability and need of the people. If requires, we will have an additional session which will be for doubt clearance, and if there is anything additional which I need to be covered, which I would need to cover basically. Jagdish, I haven't thought on having a separate VLP Ultimate group as of now, but still let me see if it will be a common group with the existing VLP, or is it going to be a separate one. Recording will be available by tomorrow end of the day. Please do not follow up for that. Actually, I will communicate all of you or email. Okay, so keep on checking your email in between. By tomorrow end of the day, I will upload all the recording part basically. Okay, great guys. Thank you for your patience and keep on holding for such a long duration. We will be in touch on the student group. Excel group, everything Excel This presentation and video recording, everything will be shared by tomorrow. Arun, the EXE part, let's take up separately. It is working for all. If it is not working for you, then we need to look into that. What is the problem? I think you mentioned me. You sent some message on Telegram or WhatsApp. I have given you some response of also. So just check that. Let's take it separately. Thank you. Thanks all for joining. Have a nice remaining weekend and another great week ahead. Thank you. Thank you. Logging off now.